Mic check, mic check. All right, good morning.
So for us, it's taking what they're spending their money on and broadening out the market.
Okay, Microsoft has earnings tonight.
We've been doing it.
Microsoft with earnings, along with Meta. Kospi index is down. SK Hynix was down quite a bit overnight after earnings. They actually made $65 billion thereabouts.
Things fundamentally are great. I mean, we're looking at 38% year over year.
Wild night with the Kospi up and down.
Multiple compression when earnings are growing like this. That's why the market is held up through a possible hawkish Fed decision and $80 to $90 oil instead of breaking. The earnings are what's helping us.
We got the FOMC rate decision today.
The earnings still continue.
Fed rate decision today.
Makes the ability to continue growth mode.
Mic check.
Is basically based on all of the earnings numbers that we've seen so far. And quite frankly, that doesn't seem to be slowing down anytime soon. It's going to be what happens with the what
Mic check.
The spend as we look at depreciation in 2027 and 2028 is the question is
thank you. How's it going, Texas? Okay, futures were much higher this morning. They backed off. Let's go look at SPY. SPY pre-market high is up here, pre-market high. So we're back below into the lows of yesterday's price action.
Absolutely. There's always going to be opportunities there, Nicole, but what we're seeing too is a lot more downstream stuff. The next eras is one of the ones that we like. We see a price target in there 10 over the next 12 months. Anything in the energy sector, anything in the memory sector.
Brent was talking about put flies on the S&P 500. Brent was talking about put flies, 7,200, 7,000, 6,800.
Even with Google right now, we still have to remember that 2 out of 3 sets of eyes in the world are on one form of Google or another in one of their platforms, one of their products, one of their services every single day. So we have to kind of get out of our own way a little bit, kind of look and see what's going on with this and see where the opportunities lie. The hyperscalers continue to be very good purchases until we start to see their revenues start to go down. Again, as you mentioned at the beginning, Google still has a very, very strong revenue, up 24%.
7,200, 6,800, 7,000 is the center.
Because if the top end is capped out on the hyperscalers, they're still spending money on all of the downstream companies that are going to be given the materials, construction, real estate, and energy.
Yeah, HSBC has Nextera, the price target there, 114 with a buy rating of 89. It's been on a bit of.
So Brent's looking at 7,200, 7,000, 6,800 put flies.
It's great to see you.
For protection.
Well advised. Thank you, Greg. Quick break. Gonna be the opening bells on Wall Street. We have a lot of names to watch. We've talked about a few already. CAPLA, we have Teradyne, Humana, Ford, Microsoft and Meta after the bell, and many more to come. We'll be right back. Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards.
Outcomes. Meantime, Jim, the shares of Meta are in the midst of their longest losing streak in history.
Yeah, I mean, Meta had that big run into when we said that they're probably going to use cloud-like products, and the next thing you know, it is not all the way back, but it's.
Okay, we got 2 minutes to go.
When you say about the open model, the big guy who's picked the open model is Jensen Huang in NVIDIA. He does not want any blockage by Anthropic, but then David, OpenAI signed the letter that Jensen Huang put out. Yeah. So I mean, why are they being blasted?
I don't know. I mean, in a recent podcast I'm reading as well, Sam Altman talking about AI safety, but saying a lot of it is about people that just really, even if it's slightly subconscious, want to concentrate power. Do we have that sound actually? Oh, all right. Let's play it. I am terrified of a world where the very real fears of AI.
7:31.
Way to say only the smarter people can have it because it's too dangerous. Only they understand it. But don't worry, like they're going to make the right decisions for all of us. I don't believe in that. I don't think anyone should want to live in a world of AI overlords or a company that is the rough equivalent of that, where someone is making decisions for all of the future and in exchange for a cure for cancer, which obviously is a wonderful thing. We kind of collectively cede all agency. It's the Invest with the Best podcast, one of so many out there. Altman, obviously, a frequent guest on so many different things, but always worth listening to. And this is
Okay, so we got negative gamma down below.
And of course, the role of the U.S. government.
Microsoft, SPY, going into the opening bell.
Whether it does see them as competitive threat, so much of this wrapped up in that and the national security debate and the AI safety debate as well.
Well, how about the humanoid robots? Last night they banned China, which I think is
And we're open. Give it a few minutes for the markets to settle down. Apple popping, Snowflake popping. The rest of the New York Bang Index is lower. Need a bounce to buy any put flies.
Focused on clean energy, celebrating 25 years. At the NASDAQ at Times Square, Cumulus AI, a cloud computing service provider.
Snowflake on the move. Snowflake. Snowflake.
The drawdowns of the major names off the 52-week highs, the NVIDIAs, Amazons, Google's, Meta's, and so forth.
Yeah, look, it's a crux time.
Apple. Adobe's up. SK Hynix bouncing. Let's see what SK Hynix looks like. SK Hynix.
22 million. That's why this is sure shine goes on Wall Street. There is a propensity, I think, to move your action away from these.
They sold $65 billion in semiconductors and in related equipment.
What is the map?
Who's having one shape?
SK Hynix, 259 billion.
It's just had nothing real happen to it. This is what people want. Right there. They want nothing real happen to it.
SK Hynix on the move. Okay, number of stocks advancing. We closed yesterday with 363 stocks advancing. We got 196 today, 196.
The government still have its
SK Hynix on the move.
I'm done with this. This group is too crazy. People collecting intel what's going to happen. That's better to get out ahead of it. But the president, today, yeah, he did not have
You don't think it's possible that this is somewhat similar to the DC moment where we saw a broad sell-off that took place over a period of time, and then we came back to the ultimate thesis, which is AI is going to be the biggest thing ever. There was unconstrained spending that will continue because nobody wants to lose the race or be say, wait a second.
Okay, we're back to pre-market high on SK Hynix. SK Hynix.
Are you saying this is a possibility? Yes, possibility. You make it, you have to make that a possibility. And then you say, wait a second, OpenAI is opening with about time. OpenAI is
SK Hynix.
a company that we have to watch because they did a gigantic fundraising at a high level.
Okay, S&P is bouncing. The S&P 500.
I think people say, you know what, the guy that has spent the most, by spending the most money is the guy who is the most trouble. That's what I'm worried. It's have a lot of profits killing, have a lot of commitments, although now potentially being backstopped to some extent by NVIDIA, but a lot of commitments for a lot of compute. Oracle obviously is one of the key parts of that.
You can see the negative gamma creeps upward towards the end of the day. You can see it's got like an upward angle of about 10 degrees. Purple is overhead. Watch the contour lines as they move up and to the right to the top of the screen. Purple is positive gamma, so we're looking for prices to move higher. If the FOMC comments are ill-received, we could drop into this area very quickly. So you might want to consider those. You might want to consider these put flies for the end of the month, 731. This is what Brent took. So any bounce would be an opportunity. Palantir on the bounce. Okay, SK Hynix is still moving.
Response is nothing like the deep sea.
This was it. This is the way to raise money. And everyone's underwater.
They may be underwater, but it still did raise $85 billion. I get this. By the way, we may not be done. There may be some more equity offerings.
Why don't you just review it? I don't know.
Okay, Palantir. Palantir.
Any questions? You're gonna narrow it down?
Well,
no, I mean, people wonder whether Meta might want to do something. I don't know if they will.
That was after this charm offensive by Mark Zuckerberg, where he's everywhere.
It's interesting. Some actually get interviewed by real journalists.
Isn't that something? What's changed? I don't know, you tell me, you know them far better than I do. Well, I think that it's a little existential. They need the thing, they need the thing to be open. I mean, they need everything to be open. They need cheap compute. They don't have the cheap, drop, you know, they don't have a process.
Number of stocks advancing, improving, 210 stocks advancing. Palantir just turned back down. All right, so early profit taking. Snowflake still moving here. Snowflake still headed higher. Snowflake.
A lot of the insurance rates do come out.
Snowflake. SpaceX was higher yesterday. Inside bar. We're inside the upper half of yesterday's range. SpaceX. We'll look for follow through. SpaceX. I'm looking for the markets to bounce a bit more so I can buy some of these put flies. Okay, S&P 500. I'd like to buy some of these put flies. I just want to see the markets bounce a bit more. Let's see what they're priced out at right now. $731 expiration. That'd be pretty cheap. Is that AM or PM? What do we got here?
You think they're going to go out of business? I know, but it doesn't have to go out of business. It's not going to be able to.
Looking at Fitch this week, looking at whether or not all of this is a overall credit risk. I think 7 feels more. I don't know.
That's not meta credit, by the way. That's to finance.
That's Friday.
But that's why I'm saying the people who sold the bonds were saying this is a great opportunity for you, Mr. N. Meyer.
72, 70, 7200.
Now, you bet U.S. government was at 6.5% when we had the .com crash. 6.5%, and it turned out to be, well, you know, I don't know if you wanted that piece of paper. Turned out to be okay though. Yeah, so far here we are 25 years later, and you know, well, I'm just we're still barely solvent. David, here's what I think we're saying. It's just not as good as it was a year ago. That's all we're saying. It's not as good as it was because look, there was a financing. I'm never going to Lloyd Blankfeint's book party, and there was a financing that was for Anthropic that was at $300 billion. That thing, I think it was like a paperback and went to 900. It did because it had a growth rate the likes of which we've never seen. It's ridiculous for the book. In terms of its revenue run rate, which went from $1 billion at the beginning of the year to $9 billion to $30 billion to I don't know.
All right, those put flies. Those put flies are going for $4.65. So we got to get this to bounce first. Okay, so I'll look at buying this. I'm looking for a bounce though. Just a hedge. SpaceX pulling back. See what Rocket Labs is doing. RKLB. Okay, that's inside of yesterday's range. Let's see what's working.
Change their percentages. And have you noted how often Dario, at least, at the very least, has talked about the risk of
Coca-Cola, defensive stocks are up again. Google's higher. Amgen is higher. Cisco higher. Coca-Cola was active yesterday. It's inside of the top of its range from yesterday. Chevron.
By the way, there's a piece on the tape about Apple, Jim. Maybe set for their strongest June quarter sales growth in 5 years.
And somebody on yesterday was saying, well, listen, it's really expensive at 34 times earnings. Well, what happens if DRAM prices are coming down, or they bought a lot of DRAM, they raise prices for their stuff, and they have blowout gross margins? Look at that chart. Look at that chart. Doesn't it remind you of Amgen?
VRT.
To the degree we're looking at rotations is that it doesn't work every time. Procter's a good example today on this revenue miss. They did.
Okay, they're looking at November.
But into the guidance for 27 organic, 1 to 3.
No, we got rid of that thing. Tell you that beauty was good, and that's about it. It's about time. I mean, Unilever was up yesterday.
230.
In the great state of Cincinnati, where, by the way, Sarah Eisen is from. What you would say is, wait a second, Unilever beat us. Look at the Unilever chart. David Unilever, that's like what, Dove?
God, his voice is just incredibly irritating. Can't imagine what he was like, Kramer was like during high school.
Crypto, a new crypto ETF. It's time, and we've seen a lot of the big institutions doing this. Why now? Thank you for having me, first of all.
Okay, watching for the S&P. I want the S&P to bounce so I can get some of these hedges. I like to buy some of these hedges. Okay.
I think what we were looking for was enough regulatory certainty that we could bring to market and actively manage crypto ETF. That's the right type of product for this market. And so we were waiting for that sort of certainty to be able to happen. So TKNZ, what will be crypto ETF? So TKNZ, the ticker, okay, so the investable universe is actually incredibly flexible. So the universe consists of the SEC generic listing standards token. So if there can be a crypto ETF on it, it is in our eligible universe. And then within that, we can allocate across any tokens that we like to.
Okay, Snowflake still pushing. Okay, back to what we were looking at before. Stocks that are on the move, Dow Jones, let's look at the S&P 500. Garmin is up 12, 13%. Garmin, GRMN.
Can't say it was a high environment because it wasn't, but there was maybe other things happening, money getting allocated. I was even thinking some margin calls.
Paradigm, GE Healthcare, GE Healthcare.
It's been a difficult market for the past year. It's what we generally refer to as the crypto winter, and we call it a crypto winter rather than a bear market because it tends to be long, hard, cold. I think what we had was a run up of
Ford got 2 upgrades yesterday. Ford with 2 upgrades yesterday.
So we had a supportive SEC, a lot of regulatory guidance. We got ETF access. And I think one of the things that happened is the market was really coming off a 2-year sort of sugar high of nonstop news, and have that type of transformation, that the news comes to an end.
Mondelez up big. Ford coming out of a squeeze looks really good.
Been a lot of emphasis on what institutions are building. And I think
Doesn't have much upside. Maybe $2. I haven't traded Ford in years and years and years. Okay, Apple's on the move. Apple's going. Apple at the pre-market high.
As you just noted, it's being adopted, being understood, and it's happening across the board.
The close above 341. 341.
Rates. We have a Fed day today. Where are you watching those as far as something like this ETF? So we've seen crypto markets fairly sanguine going into the Fed decision today.
Okay, Apple watching for day trade here. We're at the pre-market high. Pushing through the pre-market high right now. We closed above. Here's the volume. Okay, Apple's going.
I actually don't think, and this is very new, I actually very active and nice.
Apple on the move.
I mean, touching hurdles recently pertaining to the ethics part of it that the president put together. A week ago, there was so much momentum, and it really looked like it was going through.
Okay, Apple
Zero DT.
I bought some 345s.
It's a good thing you're saying we don't have to have it. It's not a must have. We need to have ChatGPT is that, right?
Zero
You know, as
DT.
far as
Micro
demand for
GT
what
London.
expectations,
And
what's
beyond.
promising that as they this is an actively managed fund, which that makes it exciting and obviously on top of things. But what do you tell them about where this is headed? Because we're
Apple pre-market high, breaking out on volume. Stop underneath. Stop.
And there's been a lot of uptake
Zero
from retail in
DT.
particular, which is something
Stop.
our
Stop if it lose the pre-market high at 341.85. 341.
look at sort of narrative, sector growth, adoption, and then we also look at momentum and trend on top of that. So while people focus on
Stop if it drops back into this. Looking for a follow through. Big volume here on Apple so far.
there are single tokens that have done
Zero
well in the past
DT.
several months. Hyperliquid is up
Stop.
28%
Zero
year to
DT.
date. So active management matters, and yeah, picking those tokens will make a difference.
Zero
Right,
DT.
well, it's great to have you. Thank you so much for being with us. Blue Map Learn, digital asset strategy team. Right. Thank you.
Zero DT.
Let's use the key lessons to launch your market.
Snowflake. All right, all the other New York bangs.
Turn towards defense, and this particular ETF, Global X Defense,
Zero DT.
symbol SHLD, which I like than they did with Shield.
Zero
But
DT.
from that perspective, this ETF also
Zero
incorporates not just U.S. technology and the defense space, but also a couple of fairly large European players. So there are some pushes and pulls here with this price movement. Now, I've done it on a 1-year daily chart. Looking
Zero
at the
DT.
comparison.
Okay, futures pulling back a little bit. Apple's pushing higher. Okay, hedge flows turned down. Okay, we got resistance right here. 74.30. It's not a 99 percentile. Let's see what net open interest looks like. We got 7,400 major support. 74.75 is resistance.
Increases the emphasis on ETFs like SHLB in this case. Kind of a bit of an inverted shoulder building to the 165 resistance level. Bit of a bullish
7,400.
going on with the RSI. Start to see that potential test of that resistance. And if we look at a longer term chart, I've got a 3-year weekly chart here. And this is
Zero
not a terribly old ETF.
S&P turning back down. Apple might not work if the market's dumped. Apple might not work.
So hopefully, I mean, everybody wants peace, right? But at the same time, if you're a Shield investor, maybe peace isn't the best thing in terms of this bearishness on this long-term stuff.
Stop.
Thank you for that, all the details. Thank you, Ben. Thank you.
Apple with earnings tomorrow. Snowflake starting to fade. Okay, we got more stocks advancing. We got 250 stocks advancing, so it's 50-50 right now. Apple's still pushing. Apple's still pushing.
Schwab Network. Subscribe at schwabnetwork.com.
Let's see what breadth looks like.
With thought, I'm
Okay, here's a New York FANG. The New York FANG below that trend line. Oh, NIMO, NAMO. Okay, these are all starting to peak after a nice run up. Okay, Apple, keep an eye on Apple. S&P is still moving low. I'm going to take this Apple off if it doesn't start working. Okay.
Stock exchange. When markets react, we rely on analysis that matters. Watch now on WildNetworks.com. For the very latest update on the market, our market.
Come on, Apple. You can do it.
Patrick, I'll start with you. I mean, front and center. Microsoft, do have some of your thoughts of what
Yeah, look, the two focus for me, M&M, last time I was on, I highlighted that.
S&P still dropping pretty quickly.
So to me, today, there's a lot of
S&P right at 7,400 now. S&P is at 7,400.
Yeah, and I think about Microsoft expected to post the fourth quarter revenue growth, the Meta and AI spend, infrastructure build out, strengthen the app business. It's all about this CapEx spend and the demand for AI. I mean, that is what it has been. Sterling, good morning to you.
All right, the company is expected to report its strongest June quarter sales growth since 21. Expecting revenue to rise 15.5%. iPhone sales are expected to decrease 20.8%. I've been seeing a lot of people at Best Buy constantly hovering around the Best Buy Apple display, talking to reps, coming back 5 or 10 minutes later and seeing them standing there buying a phone or service. So that's good to see, I guess. Okay, we're pulling back in. Okay, S&P is starting to bounce, looking for a follow through with Apple.
Telling us that there needs to be a rate hike or that the market believes, Sterling, that there is a rate hike coming. That
I do think the market kind of feels at the 2-year level that we could see a rate hike. If we do get a rate hike, I think longer into the curve, let's say 7 through 30, might actually like that.
Opening range 5 minutes. S&P continues lower.
That could end up getting a counterintuitive response where we actually see the long end of the curve, see rates either stabilize or maybe come in a little bit and the front end moves up. So that is where we are. That we get a little bit of and that combined with some discomfort in the stock market, it should be an interesting day.
yeah, and as you mentioned on oil, I was talking about
Okay, as Apple is not following through. Apple's not following through on a pre-market breakout high. The overall market is weak. With S&P 100 is at 7,400. Now below. Yesterday we did the same thing. We dropped below 7,400 briefly and then bounced. We'll find out where these levels are in a few. S&P still dropping. Looking for a bounce. Negative gamma.
I think there's going to be a moment of what they're doing. As they accelerate this spending, they're going to have to look out at different time frames, maybe 6 months to a year out than they're used to. And so that's where you get a lot of shock and kind of disconnect from the market where they're trying to figure out what
Riot down. Let's see. GE Healthcare. GE Healthcare. GE Healthcare pushing higher. GE Healthcare.
Play it safe today. I think the upside right now in the market's being capped. The downside could prove to be a little bit worrisome here. And we'll just see where we are in terms of the spend. Eventually, this AI is going to have to prove its stage. It's going to have to make money. And that's things are going to get really interesting.
We've got 256 stocks advancing. More stocks are beginning to advance. Apple trying to bounce.
Thank you, Brent, for being with me here on Schwab Network. I'm Nicole Heavily every day at 9 p.m. Today at 2 o'clock. Special edition.
All right, we got 2 minutes, less than 2 minutes for the opening range. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, July the 29th. Fed decision, rate decision today. Okay, Apple doesn't appear to be working here. I'm going to go take off flat. I'm taking this off flat. Okay, I'm out.
That means you could stop waiting and start investing in stocks, bonds, money market funds, and get with Schwab Bank Investor Check, the checking account built for investors.
CSGP. LGHL.
Schwab coaching is concepts brought to life.
Okay, we'll look at this again. Hopefully Apple can regain its composure. It's got earnings tomorrow.
Understandable.
All the New York banks are down, so this is a bit more risky. Intel, all the most of the chips are down. JP Morgan pulling back today. JP Morgan.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
want to engage with you in the chat. Shows we host. I want to engage with you outside of class.
Google.
We'll learn differently at different times.
Somebody's real
Google's above the 200-day.
They can dig in, go at their own pace.
Google.
All day, every trade. We've got this ongoing 20.
Trying to bounce here. Google trying to bounce.
Events. They're making their way.
It'd be nice to see these New York FANG components. Some short covering.
Step by step along with education.
It's really unique, not just that it exists, but that you
Watching Google for a bounce.
how incredible is that? And it's free.
SKHX. SKHU. SKUU. SKHL. SKHX.
SK Hynix continues to show strength. On the dip, people buying SK Hynix.
In real time.
Above pre-market high, SK Hynix. Opening range high here.
Welcome to Morning Trade Live. Mouse Coffee in for Sam Bonus this week. Here's a look at what's coming up on today's show. We'll take a big picture look at the market.
Opening range high. There goes SK Hynix turning back up.
Coming from hyperscalers, Microsoft and Meta.
Apple still flagging. So is Snowflake.
it's got an upgrade post earnings, and we'll also preview.
All right, 230 stocks advancing.
Well as Starbucks, but before all of
Core 1M is almost at 10 now.
just a little bit of pressure here. Maybe some angst sets in ahead of the FOMC and some of those big earnings. S&P 500 right now down about 0.4%. NASDAQ 100 down about 0.5%. Russell in line with the S&P and the Dow down 1.16%, or 600 points in the Dow Jones. Take a look at some of the futures markets on our board as well. Really close to unchanged for the dollar. Yields I anticipate.
Okay, SK Hynix looks like it's going to go. SK Hynix.
Particularly after Kevin Warsh's press conference and ultimately the decision that we get on rates. So that story yet to be written. Gold also under pressure here. Going the opposite direction of Bitcoin.
SK Hynix is a buy.
Does Bitcoin
Stop if it loses. If it loses 132.
Also kind of bucking the trend of the NASDAQ today as well. So something to watch for Bitcoin. Crude oil.
Orb is firing. Okay, there goes Apple. Apple following through. Okay, Apple's going. Okay, opening range high right there. We need an opening range breakout on volume.
What do you make of the trade so far, and how do you set things up here?
Well, clearly it's too early to tell what'll happen as we move throughout the day, but typically, just based on my experience, days like this, we start to see
SK Hynix, SKHY, looking good.
Zero DTE. Zero DTE. Zero
decision, markets kind of settle out. So right now,
Zero
we're seeing
DTE.
major indices look like there's a downside at least right now.
Apple looks like it wants to go some more. It's overbought right now on a 2-minute time frame. Looks like it could go though. Apple. I took it off flat, small loss.
Just look at the NASDAQ 100. I think that's telling the story of what's going on in the technology group. There's major dispersion in that space right now. Specifically,
SK Hynix looks like it wants to keep going.
center trade, whether it's Brent in the electricity space or whether it's Micron or even looking at SanDisk, which was the sort of huge winner in the last year. It's down almost 50% from the high. So it's incredible how quickly things can change, and they have changed at least right now. Semiconductor storage space, but nonetheless, you'll see.
It looks like SK Hynix wants to go. SK Hynix looks like it wants to go. Apple's stalling at the high of the day. Snowflake, same thing. Microsoft getting a bid.
SanDisk Pulse. Long dated. SanDisk Pulse. Long dated.
A lot of activity on SK Hynix down here at the low.
Shenanigans. Zero DTE.
They make a lot of money. It's really crazy that SK Hynix has pulled back as much as it has.
Zero DTE.
S&P is turning back up.
Zero DTE.
Hedge flows are turning up.
Zero DTE. Call strip. Stop. Zero DTE. Call strip. Zero DTE. Call strip. Stop. SMH Pulse. Micron Pulse. Long dated. SMH Pulse.
Okay, S&P 500 is at support.
Zero DTE.
7,400 is support. It did this yesterday.
SMH Pulse.
So clearly right now, the focal point, if your portfolio is heavily weighted in this stuff, things are really bad. Just because the dispersion between the markets now and the momentum trade is unwinding. Again, the question is why the unwinding is happening? Well,
Zero DTE. Put strip. Size. Zero DTE. Call strip. Size. Zero DTE. Call strip. Zero DTE. Put strip. 0 DTE, call strip. Size, Tesla pulse, long dated.
A lot of puts trading here. A lot of puts trading.
Spider pulse, long dated. 0 DTE, put strip. Size, AMD pulse, long dated. Spider pulse, long dated. Amazon, long dated. Deep call. Zero DTE, put strip. Size, 0 DTE, call strip. Size, 0 DTE, call strip. 0 DTE, put strip. NVIDIA pulse, long dated. 0 DTE, call strip. Size, Tesla pulse.
Let's see what Google is doing. Google.
Spider pulse, long dated. 0 DTE, put strip. Size,
SPRC may res in 10 seconds.
Okay, Apple pulling back.
DTE.
S&P still dealing with the 7,400 level.
Call strip. Size, 0 DTE, put strip. 0 DTE, call strip. Tesla pulse. NBIS, long dated. 0 DTE, put strip. Size, TSM pulse, long dated. Deep calls.
May res in 10 seconds.
Zero DTE, put strip. Size, 0 DTE, call strip. Size, 0 DTE, put strip. 0 DTE, call strip. 0 DTE, call strip. Size, Meta pulse. 0 DTE, put strip. Size, SPX pulse. Long dated.
ESX. SPRC modeled to the upside.
NBIS, shenanigans. 0 DTE, put strip. Size, 0 DTE, call strip. Size, NBIS, shenanigans. SPX pulse, long dated. 0 DTE, put strip. 0 DTE, call strip. 0 DTE, call strip. Size, NBIS, shenanigans. Zero DTE, put strip. Size, NBIS, shenanigans. Apple pulse, Apple pulse. 0 DTE puts. 0 DTE, put strip. Size, 0 DTE, put strip. 0 DTE, call strip.
0 DTE, call strip. Size,
FOMC melted down.
zero DTE, put strip. Size, NVIDIA Pulse, long dated, deep calls. NVIDIA Pulse, long dated, deep calls. Amazon Pulse, zero DTE, put strip. Size, zero DTE, put strip. Zero DTE, call strip. NVIDIA Pulse, long dated, deep calls. Zero DTE, call strip. Size,
D. UVIX. SXX. LVD. NVD. Amazing less than minute. DMD.
Low tick alert minus 800.
D.
Looks like lower today is what we're going to be doing.
DAMD.
I was hoping to get a little bit higher to take some of these put flies, but not going to get the chance, looks like.
D. SPRC may resume in less than a minute.
All right, everything is fading at the moment. Let's see, the number of stocks advancing, 230 stocks advancing.
DAMD. GTZ. F. MS has halted to the upside. SPRC may res in 10 seconds.
All right, starting to bounce. Looks like what's going to happen today is we'll have a descending pattern. Okay, looks like we'll have a descending pattern today. Every time we hit the highs, probably going to get rejected. Pretty much like that. We'll see where we bounce.
C may resume in less than a minute.
Looks like a channel down for now. Looking for a bounce back to this upper trend line. VWAP at a maximum. 7,400 probably is rejection now. All the New York Fangs have turned down, so we need the New York Fangs in order to rally. That's not the case right now. New York Fangs, we're losing that trend line. We're coming down to the support level, so we'll readjust that. RSI is still drifting lower. All right, so we hit this level multiple times. New York Fang. Previously, there's a descending triangle, tends to break to the downside, descending triangles. That's the 50-day right there. $200-day, 9 EMA, 21-day, 9 EMA and 21-day right there. 50-day. Okay. Stochastic is reset. Stochastic could turn up.
Size 0 DTE put strip.
All right, we got another put. We got another bear flag.
Put strip.
Another bear flag.
0 DTE call strip. Meta pulse. Long dated. 0 DTE put strip. 0 DTE call strip.
Apple failed at the high. Apple failed. It's losing VWAP as well, so that's
Amazon pulse.
no longer working. Apple has earnings tomorrow.
SPS.
Still got 232 stocks advancing on the S&P 500, 44 on the Q. Let's look at some of the stocks that are working at the moment.
0 DTE.
GE Healthcare is working.
0 DTE.
Big move higher, GE Healthcare on
0
earnings.
DTE put strip. Size 0 DTE call strip. 0 DTE put strip.
GE Healthcare earnings. They beat by 9 cents, 31 million. They came in at 5.29 billion versus 5.26 billion for a $31.1 million beat. 0.6%.
MSS may resume in less than a minute.
Okay, so that's probably going to stay up there. Can't buy it now. Might be able to sell some premium up here. Let's see,
0 DTE
see
call
what
strip.
that looks like. GE Healthcare.
0 DTE call strip.
GE Healthcare. Let's see what that looks like.
FIE halted down.
IV rank is 47%.
Long
I'm
dated.
sorry, 71% IV rank.
Long dated.
IV percentile, 85%.
STKH halted to the upside.
Apple pulse.
GE Healthcare.
Long dated. Zero DTE call strip. Size
JBLU. SWKS. DJT.
No volume.
Amazon pulse.
I was thinking about selling some premium, some call spreads, but there's no volume. Call side, very little volume on the call side. Huh, interesting.
MSS halted to the upside.
37.
SWKS.
Yeah, there's no volume up here. People buying shares. GE Healthcare, nice earnings. Let's see what else. Teradyne also gapped up.
Spider pulse.
Teradyne with earnings.
Spider pulse.
That's fading the high.
Spider pulse.
ADP.
SMH pulse.
ADP breaking out. Looks like at the right side of a cup building on ADP, automatic data processing. Diamondback Energy, number 5 on the NASDAQ 100. Diamondback Energy. Garmin is number 1 on the S&P 500. Garmin, big move here on earnings. Let's see what their earnings were. Okay, so earnings are tonight.
Shenanigans.
Huh.
JBLU.
Okay, the airlines have been doing well. I just heard JBLU,
Size.
JetBlue,
0 DTE. Colstrip. Size.
SpaceX. Okay, inside day, CBRS. These all got hit last night on
Shenanigans.
SK Hynix
0 DTE.
and the Kospi.
Colstrip.
SWKS.
Okay. What's SK Hynix doing? SK Hynix. Okay, that was up, faded. Everything is fading, so I would just like take it easy. It looks like today is going to be one of those days where we're not going to make much progress. S&P 500, descending channel.
Shenanigans. 0 DTE. Put strip. Size.
FIE may resume in less than a minute.
And CRA.
0 DTE. Colstrip. Size. Micron pulse. Long dated. AMD pulse.
SWKS.
0 DTE.
NBIZ.
Colstrip. Size.
SOXS. STKH may resume in less than a minute.
Q's pulse.
SQQQ.
Long dated. 0 DTE. Put strip. Q's pulse. Long dated.
And
Q's pulse. Long
WZ.
dated. Zero DTE puts.
FIE may
0
resume 10
DTE.
seconds.
Call strip.
NBIZ.
0 DTE. Put strip. Size. Zero DTE. Put strip. Size. Micron pulse. Long dated.
STKH may resume.
S&P,
0 DTE.
hedge
Call
flows.
strip. Size.
Okay, all of that's gone now, right?
Q's pulse. Long dated.
Still there?
0
Okay.
DTE. Call strip. Size. 0 DTE. Put strip.
SQQQ.
It's 73.50 is the next level, 73.50,
0 DTE.
and then 7,300.
0 DTE. Put strip. Size.
SOXS.
The winners
0
currently on the
DTE.
S&P 500,
Size.
Amphenol, these are all fading. Note the wicks or the color of the candles means it gapped up and is fading.
SQQQ.
Boston Properties
0 DTE.
breaking out. BXP, Boston Properties breaking out.
C. COD. SOXS or C may resume in less than a minute. SS may rise in 10 seconds.
Nvidia pulse. Long dated.
SNTQ. UPIX. ABD. MBC.
Boston Properties.
SOXS. MSS vaulted down.
All right, that's trending.
GTZ.
Boston Properties breaking out. GE Healthcare, Garmin, Biogen, Mondelez, Diamondback Energy, Diamondback, Thomson Reuters, day 4.
IREZ. MTQ. XS.
SPRC. NCR.
IREZ. BC.
Thomson Reuters, Adobe, following through, showing relative strength.
SPRC.
EXLS. FIE may resume in less than a minute.
Adobe also showing strength. Workday, all of these look good. Roper Industries, that's been active this week. Roper, ROP. Autodesk, ADSK, ADSK. 235 stocks advancing. Core 1M is up to 1033. Core 1M.
DT put strip.
FIE may rise in 10 seconds.
0 DT call strip.
Verisk,
0 DT call strip.
VRSK, Verisk.
0 DT put strip. Size. Holy cow. SPX. SanDisk pulse.
Okay, I need to see some put sales down here.
SPX. Long dated.
Need to see some put sales down below. To show us a bottom.
0 DT put strip. Size. 0 DT call strip. Size. 0 DT put strip. Size. 0 DT put strip. 0 DT call strip. 0 DT call strip. Size. BE pulse.
MSS may resume in
Long
less than a
dated.
minute.
Deep puts.
Okay, so we got another level on down here, 98 percentile.
IW pulse.
SWKS.
BE pulse. Long dated. Deep puts. 0 DT put strip. Size. 0 DT call strip. Size. 0 DT call strip. Size. 0
MSS may
DT
rise in 10
put
seconds.
strip. 0 DT put strip. Apple Pulse, long dated.
Apple, they're going to push it again.
Apple Pulse, long dated. Zero DTE, put strip, size, 0 DTE, call strip, size, 0 DTE, call strip. Zero DTE, put strip, size. Spider pulse, size, spider pulse, size. Q's pulse, long dated. Q's pulse, long dated. Apple Pulse, long dated. AMD Pulse, long dated. Spider Pulse, size, 0 DTE, put strip, size, 0 DTE, call strip, 0 DTE, call strip, size. Apple Pulse, long dated. Zero DTE, call strip, size. Zero DTE, put strip, size, 0 DTE, call strip, size. NVIDIA Pulse, long dated, deep calls. 0 DTE, put strip, size.
TGT. GTZ.
0 DTE, call strip, size.
All right, looking for a bounce. Is downside done for today? We got these two levels down here.
DTE,
Got a 99 percentile at 73.50.
put strip, 0 DTE, call strip, size.
Potential bounce area. All right, potential bounce area. 73.50-ish.
TGT.
SPX, long dated.
CSGP.
SPX Pulse, long dated. Zero DTE, call strip, size.
MSS may rise in 10 seconds.
Tesla Pulse, long dated.
ATHR house it down.
All right, so we got potential bounce area coming in to view. Okay, S&P 500 We're at 73.75 now.
FIE, MSS,
NBI, long dated.
MS has halted to the upside.
Okay, GE Healthcare looks like it wants to keep going here. GE Healthcare,
RCX pulse. Shenanigans.
MSTZ.
GE Healthcare with an orb opening range breakout. GE Healthcare. Not the best day to be taking additional risk.
SPRC,
Now we got the Fed rate decision today, so a lot of these stocks that are up right now could be down.
BE pulse. Long dated.
FIE,
Deep put. Q's pulse.
MSTZ.
Long dated. Zero DTE put strip. Size.
MS has halted to the upside.
FIE,
Russell pulse. Q's pulse. Long dated.
ATPG.
Okay. Apple. Trying to turn the corner. Watching level 2 to see if there's any interest.
MSTZ. UVIX.
QQQ Pulse. Put still leading on the Qs. GE Healthcare looks good. GE Healthcare.
Micron pulse. Shenanigans. TSM pulse.
Nice gap up on GE Healthcare.
Long dated. Shenanigans. Micron pulse. Long dated. Shenanigans.
Okay, Microsoft bouncing.
D.
Microsoft bounce.
SOXS.
Zero DTE put strip. TSM pulse.
UVIX.
Long dated.
MSTZ. UVXY. ATHR may resume in less than a minute.
New lows here on the S&P.
DTE put strip.
Okay, they're not done yet. They're going to go down to that 73.50.
DTE put strip. Size.
They're going to go down to 73.50.
D.
Apple pulse. Long dated.
UVIX. UVXY.
Micron pulse. Long dated. Shenanigans.
DFNS,
MSS may resume in less than a minute.
Just a reminder, I'm going to be visiting my mom
ATHR may resume
on Friday. I won't be here. I'll be in the room in and out. I'll be posting
Nvidia pulse.
hedge flows and S&P 500 levels, but I won't be here broadcasting. So you won't hear me live.
Zero DTE put strip. Size. Zero DTE put strip. Size. Russell Pulse, long dated.
UVXY. MSS may res in 10 seconds. MUZ. NVD.
0 DTE, call strip.
SOXS.
Broadcom chips are down. They were up yesterday. Chips are down. We got Microsoft reporting tonight. Microsoft reporting tonight.
UVXY.
Along with Meta,
0 DTE,
Microsoft and Meta reporting.
0 DTE, put strip. Size.
MUZ.
LRCX Pulse, shenanigans. LRCX Pulse, shenanigans. LRCX Pulse, shenanigans. LRCX Pulse, shenanigans.
MSS.
LRCX Pulse,
UVIX.
shenanigans.
You heard all those LRCX. Let's see what's going on with LRCX. Puts,
0
puts,
DTE, call strip.
puts,
Size.
puts.
0 DTE, call strip.
A number of
0
puts
DTE, call side.
MUZ.
AMD Pulse.
on LRCX. Puts. All right, so big puts being bought on LRCX.
0 DTE, call side. 0 DTE, put strip. Size. AMD Pulse.
STZ.
Long dated.
MUV.
0 DTE, put strip. Size.
MUZ.
VIX Banger. AMD Pulse. Long dated. Deep puts.
Oh yeah, that's right. VIX. What are my VIX calls doing?
Deep puts.
VIX. I got VIX calls, the 20-25 call spread. VIX.
Call strip. Size. 0 DTE, call strip.
Okay, starting to get there. All right.
UVIX.
NVIDIA Pulse.
UVXY.
Long dated.
NVD.
Deep call.
MUD. SNTQ. SOXS. MUZ.
0 DTE, put strip. Size.
MSS.
NVIDIA Pulse. Long dated. Deep call. 0 DTE, put strip. Size.
Okay, so that VIX VIX is doing okay. Let's see what that's doing. VIX.
MSTZ.
Okay, VIX is up a bit.
Zero DTE,
MSS.
call strip. Size. 0 DTE, call strip. Size. 0 DTE, call strip.
MUD.
Zero DTE.
Okay. Depending on what happens with the FOMC, the rate decision, the Fed rate decision, depending on what happens, I'll probably take those off if it spikes.
Intel Pulse. Google Pulse.
MSS.
Long dated. Soft Pulse. Long dated.
MUZ.
0 DTE, call strip.
Just keeping it light right now, keeping it light.
Zero DTE, put strip. Size. 0 DTE, put strip. Size. SP exports, long dated. SP exports, long dated. Zero DTE, call strip.
MSS.
Okay, S&P trying to bounce here.
Zero DTE, put strip. Size.
All right, watching the S&P
Zero DTE.
for a potential
put strip.
bounce.
Size. Zero DTE. call
Nothing
strip.
yet. Nothing yet. 73.50 is right there.
MSS.
Shenanigans. Sandisk pulse. Long dated. Shenanigans.
We hit all the targets so far. 7,400, 73.75.
Q's pulse.
About to hit 73.50. 73.75, 73.50.
Zero DTE. Call strip.
Microsoft and Meta with earnings tonight.
Put strip.
MSS.
Micron pulse. Long dated. Deep calls. Q's pulse. Zero DTE. Put strip. Size. Q's pulse. Long dated.
$73.25 is now a 90, almost a 99 percentile.
Oracle pulse. Long dated. Zero DTE. Call strip. Zero DTE. Put strip.
1.8.
SMH pulse. Long dated. Oracle pulse. Long dated. Google pulse. Long dated. Zero DTE. Put strip. Size. SMH pulse. Long dated.
ATHR malted down.
1.8.
New York Bank's still ugly. Let's see how many stocks we have advancing. 206. So we lost a few. Core 1M is at almost at 11 now.
SMH pulse.
Core 1M is almost at 11.
Google pulse. Long
Core
dated.
1M almost at 11.
Zero DTE. Call strip.
Okay, we're above 8. That's a good thing. So calls and puts, calls are getting less expensive. Okay, everything is moving to the left. Everything is moving to the left.
Zero DTE. Put strip. Size. Zero DTE. Put strip.
GE Healthcare is still number 1 on the Nasdaq 100. It's number 2 on the S&P 500. Nasdaq ADP is number 2. ADP is number 2 on the Nasdaq 100. Adobe number 3.
Zero DTE.
These are all strong. Intuit, Financial,
NBS. Long
Software, etc. QuickBooks, Tax Cut, INTU, running.
Zero DTE. Put strip. Size.
MSS.
Zero DTE. Put strip. NBIS, long dated.
GFL.
Sense.
0 DTE, call stream. Size.
Okay, looking for a bounce S&P. Hedge flows starting to turn. Hedge flows.
0 DTE, put strip. Size. 0 DTE, put strip.
Sense.
Zero DTE, call strip. Size. NVIDIA pulse.
S&P turning.
NVIDIA pulse. Long dated. Zero DTE, put strip.
ATHR may resume in less than a minute.
All right, I bought some 7400s.
SP exports.
0 day. All right, those are going. $7,400s are going.
Zero DTE, call strip. Size.
There's 1730.
Sense.
MSS. ATHR may rise in 10 seconds.
Meta pulse. Long dated. Deep calls.
S&P trying to turn back up. 7,400 is near VWAP.
Zero DTE. Size.
MSS.
Meta pulse. Long dated. Deep Spider pulse. Spider pulse. AMD pulse. Long dated. Deep puts. Squid pulse. AMD pulse. Long dated. Deep calls. AMD pulse. Long dated.
NCR.
Deep calls.
EV showing may resume in less than a minute.
Micron pulse. Long dated. Deep calls. SMH pulse.
NCR.
SMH pulse.
EV showing may rise in 10 seconds.
NCR.
SMH pulse. Long dated. BE pulse.
NCR.
Tesla pulse. Long dated. Deep calls. Tesla pulse. Long dated. Deep calls.
NCR.
Triple semi pulse. Long dated. Deep calls.
NCR. NCR.
Fuse pulse. long dated. SOXX, long dated, deep calls. SOXX, long dated, deep calls. SOXX, long dated, deep calls. 0 DTE, call side. Size.
NCRA.
Spider pulse, long dated. Q's pulse, long dated. Q's pulse, long dated. Apple pulse, long dated. Apple pulse, long dated. Q's pulse, long dated. Size, 0 DTE, put strip. 0 DTE puts. Apple pulse, long dated. Micron pulse. Q's pulse, long dated. Size. Q's pulse, long dated. Size. 0 DTE, call side. Size.
HRZ halted to the upside. HRZ may rise in 10 seconds.
0 DTE, put strip. SMH pulse.
MSS.
0 DTE, put strip. 0 DTE puts.
MSS.
AMD pulse. Long dated, deep calls. AMD pulse. Long dated, deep calls. 0 DTE, put strip. AMD pulse. Long dated, deep calls.
NCRA. Widening. NC hardening.
All right. Nice little break. It's nice outside.
SMH
Only
pulse.
one in
All
Chanel.
right, looking for a move higher. See if we can't get some more out of this.
NC hardening.
HERZ may resume in less than a minute. IMC halted.
NC hardening.
Tesla pulse. Long dated.
All right, S&P is starting to move a bit higher.
HERZ may res in 10 seconds.
All right, S&P headed back up towards VWAP. VWAP overhead. Google turning back up. Google looking good. S&P looks like a bear flag starting to turn over.
Nvidia pulse. Long dated. Q's pulse. Long dated. Q's pulse. Long dated.
HERZ.
Micron pulse. Long dated. Deep calls. SPX pulse.
HERZ.
SOXX. Long dated. Micron pulse. Long dated. Deep calls. SOXX. Long dated.
HERZ.
IMC may resume in less than a minute.
All right, Netflix is turning up. Microsoft pushing a bit higher. Google's trying to turn as well. Google trying to turn up. So it looks like they're buying the dip. SOXS, XOXX. You heard all those trades hitting about 5 minutes ago. Looks like they're buying the dip. Still, a lot of stocks are rallying.
Long dated.
A lot of these stocks are rallying. GE Healthcare, Adobe. Adobe's at the high of the day right now. Trending, Adobe. Okay, Palantir.
Long dated.
Microsoft still rallying off the low. Microsoft
Long dated. Size.
trying to stay above that 20 EMA on the 60-minute.
Long dated.
Adobe, ADP at the highs of the day. ADP,
Intel Pulse.
Mondelez, defensive. Mondelez off the highs of the day, but strong. Diamondback Energy, Teradyne, fading. Paychecks at the highs.
0 DTE.
Workday
Size.
at the 200-day. Workday looking good. Thomson Reuters having a hell of a week, bouncing off the 50-day. 4 days later, it moves from the 50-day
Intel Pulse.
at 86 up to the 200-day at 106. Nice 20-point move in 4 days. It's up another 3.5% at the moment. Thomson Reuters. New York Times also looking good the other day. New York Times and News Corp and WSA. All of these rising. Looking good.
Nvidia Pulse. Long dated. Deep puts. Nvidia Pulse. Long dated. Deep puts.
Intel giving back yesterday's gains. It looked like it was going to do something. S&P looks like it wants to keep going here. S&P 500. Okay, looking for a follow through.
TSM Pulse. Long dated.
Taiwan Semiconductor
Long dated.
at the lows. Taiwan Semiconductor, I would imagine people are interested in buying the dip on Taiwan Semi. It's been down for 3 weeks. Getting near the 200-day. If it gets down to the 200-day, I'll be looking at Taiwan Semi.
Q's Pulse. Long dated. Soft Pulse. Long dated.
Cheesecake Factory. That had earnings, right? Cheesecake.
AGRZ.
Micron pulse.
Cheesecake Factory.
SPC. SNK.
All right, that one looks good. What was some of the other ones we had? Cheesecake.
AGRZ.
Cheesecake on the daily looks good. Big move here. S&P turning back down. Watch your stops. S&P. Big drop there in the S&P.
Micron pulse.
RKLZ.
Tesla pulse. Long dated.
AGRZ.
AMD pulse.
AGRZ.
Long dated. Deep calls. IWM pulse.
NBIZ.
AMD pulse. Long dated. Deep calls. SPX pulse. Long dated.
CRA may resume in less than a minute.
SPX pulse. Long dated.
AGRZ.
ATHR vaulted down. And CRA may rise in 10 seconds.
AGRZ. NCRA.
Spider pulse. Long dated. Spider pulse. Long dated. Spider pulse. Long dated. Triple semi pulse. Long dated. Triple semi pulse. Long dated. Spider Pulse,
EGRZ.
long dated. Apple Pulse,
EGRZ.
Amazon Pulse, long dated.
EGRZ.
Tesla Pulse, long dated. Tesla Pulse, long dated. Shenanigans.
EGRZ.
NDIS, long dated. Micron Pulse, long dated. Tesla Pulse, long dated. Shenanigans.
SS. EGRZ.
A THR may resume in less than a minute.
Micron Pulse, long dated. Micron Pulse, long dated.
EGRZ. And CR.
Cheesecake looking good.
A THR may rise in 10 seconds.
EGRZ. And CR. CR.
Marvel Pulse, long dated.
TFNS.
SP Exports, long
EGRZ.
dated.
IMD.
DGRC.
Squid pulse, long dated, deep call.
DGRC.
Sex.
Zero DTE pulse. Size. Zero DTE call sign. Size. Q's pulse, long dated.
All right, S&P, S&P just kind of sitting here, contemplating whether to hold on to these. Calls are not going anywhere. Okay, Google did push a bit higher. Google up. Google,
Nvidia pulse, long dated, deep calls.
DGRC.
SMH pulse, long dated, shenanigans.
DGRC.
Zero DTE pulse. Size.
Google looking good.
DGRC.
Centos is still moving higher.
AMD pulse, long dated. Spider pulse, long dated. Q's pulse, long dated. Q's pulse, long dated.
DGRC.
No.
Centos. Looks good.
Micron pulse, long dated, deep puts. Sandisk pulse, micron pulse, long dated. Now pulse, long dated. Now pulse, long dated. Now pulse, long dated. Amazon pulse, long dated. Now pulse.
Okay, getting a lot of pulse alerts. A lot of pulse alerts coming in at the low of the date.
SPX pulse, long dated.
All right, looks good.
ASTM.
Spider pulse, long dated. Spider pulse, long dated. Spider pulse, long dated.
ASTM.
Adobe, S&P pulling back. Watch your stops. Couple of opportunities there to sell at a profit. Pulling back now. S&P.
Zero DT.
Looks like we're headed down to 73.50 first.
Micron pulse, long dated, deep calls. Sandisk pulse, long dated. AMD pulse, long dated, deep calls.
Yeah, it looks like they want to take this lower.
AMD pulse, long dated, deep calls.
A lot of negative gamma down here. A lot of negative gamma.
Zero DTE, call side.
New York Fangs. Apple's starting to turn here. Might be a trade on Apple. Apple looking like it might be setting up for a bounce. Apple with earnings tomorrow. I don't know. I'll take a shot at Apple again. Let's see if this can go. Apple.
SKTD. NBC. SKTD.
Tesla pulse, long dated. Russell pulse, Russell pulse.
Russell Pulse Alerts. Russell IWM. At the low. Below the 50-day. Not looking good for now. Will the Fed come in and save the day? Debatable.
MSTZ. SKTD.
S&P 500. Cash. $200 days way down here. 200-day. Let's see. We got this low right here. $50-day. $200-day. It is FOMC rate decision today. A little bit less risk makes sense. Sorry, Apple's not following through, not bouncing. NIMO is back below zero.
MTNB.
Apple, no bounce yet. Microsoft with earnings tonight, along with Meta. Those are just sitting here at the opening range high. Microsoft might bounce. We could use some good news on Microsoft, right? Be nice to see some good news on Microsoft for a change. Maybe expecting too much. Snowflake looks like it wants to do something. S&P is trying to turn back up. Microsoft, nice bounce.
0 DTE.
Netflix. Snowflake. Okay, GE Healthcare. Watch on Microsoft here, looking pretty good. Microsoft on the move.
AMD pulse. Long dated. Deep puts. Soft pulse. SanDisk pulse.
S&P is trying to bounce. Watch Microsoft.
SPX.
Netflix is starting to move here. Watch Netflix. Netflix catching a bid.
DTE. Call sign.
Okay, can we get something to go? Can we get something going here on Netflix? Haven't been hearing anything on pulse alerts. Netflix LRCX. 0-day S&P. S&P calls have been leading. Calls leading S&P Pulse.
Zero DTE pulse.
HERC.
All right, it goes Netflix starting to move here. Netflix.
Nvidia Pulse, long dated. Nvidia Pulse, long dated.
Okay, Netflix. I already have 21st. Netflix pushing higher. Let's see if Netflix can do something here. Netflix. SNDK, we got puts leading. Microsoft puts are leading on Microsoft. AMD puts leading. S&P puts calls. Applied Materials calls leading. Russell puts leading. Tesla, lots of calls on Tesla.
Micron Pulse, long dated.
Netflix pushing a bit higher.
Long dated. Shenanigans.
Snowflake turning up. Okay, we're back to the opening range high for Netflix. Where's the pre-market high? Pre-market high is overhead. It's 11:52 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're looking for a bounce. S&P 500 still diddling down here, threatening this area down below. 73.25 is now a 99 percentile. These negative gamma levels here at 73.50 are gone. Now we have the 73.25 level, positive gamma, looking for a bounce. Netflix looking for a push through the opening range high right there. Pre-market high is overhead. Okay, opening range high right here. Pre-market high is overhead. Yesterday's high, about the same area as the pre-market high. Apple's starting to move. Apple is turning up. Apple turning back up with earnings tomorrow.
Q's Pulse, long dated. Q's Pulse, long dated. Spider Pulse. DTE Pulse. AMD Pulse, long dated. Deep calls. AMD Pulse.
S&P moving lower.
Deep calls. AMD Pulse. long dated, deep calls.
S&P looks like it's headed down to the 73.25 area.
Size, AMD pulse, long dated, deep calls.
SQQQ.
Spider pulse,
SSPC.
SPX pulse, long dated.
S&P is moving lower.
Spider pulse, long dated. Tesla pulse, long dated. Tesla pulse, long
SKTD.
dated. Zero DCE pulse,
Tesla moving lower.
Meta pulse, long dated. Zero DTE put strip, size. Zero DTE puts, size.
SQTD. SQTD.
Sandisk pulse, shenanigans. Micron pulse, long dated, deep calls. Zero DTE put strip, size.
LZ. No.
Zero DTE puts, size. Meta pulse, long dated, deep calls. Micron pulse, long dated, deep calls. Amazon pulse, long dated. Zero DTE, call strip. Zero DTE, put strip, size.
I already see model.
Apple pulse, long dated. Nvidia pulse, long dated. Zero DTE, put strip, size.
No.
Zero DTE, call side. Zero DTE, call strip.
NWL.
Avgo pulse, long dated. Zero DTE, call side. Size. Zero DTE, put strip. Size.
NWL. ATHR houses.
Intel Pulse, long dated, deep calls.
IRC may resume in less than a minute.
SpaceX, long dated, SPX Pulse.
No.
Q's Pulse, long dated. Q's Pulse, long dated. AMD Pulse, long dated, deep calls. SPX Pulse.
IRC may rise in 10 seconds.
Q's Pulse, long dated. Q's Pulse, long dated.
EGRC.
Spider Pulse, long dated. Tesla Pulse, long dated, deep calls.
EGRC.
Amazon Pulse, long dated. 0 DTE puts.
EGRC.
Amazon Pulse, long dated. Zero DTE, call side. Size.
HR may resume in less than a minute. IRC halting.
Zero DTE, put strip. Size.
HR may rise in 10 seconds.
Zero DTE, call side. Meta Pulse, deep calls.
Shenanigans. Meta pulse. Deep calls. Shenanigans. 0 DTE put strip. Zero DTE put. 0 DTE put strip. Start.
S&P continues lower.
SPX pulse. Long dated. Spider pulse. Long dated. Intel pulse. Long dated.
Netflix trying to push a bit higher. Netflix opening range high.
0 DT put strip. 0 DT pulse. 0 DT pulse.
IRC may resume in less than
Start.
S&P 500 down to
0 DT.
at 73.50 level, dropping through it. 73.25 is the next level. That's a bit lower.
TSM pulse. Long dated.
73.25 down here.
Micron pulse. Long dated. Deep calls. TSM pulse. Long dated. TSM pulse. Long dated.
IRC may rise in 10 seconds.
TSM pulse. Long dated. 0 DTE put strip. 0 DTE call strip.
Continue to move lower.
Size. MBIS. Long dated.
The hell is that?
MBIS. Long dated. 0 DTE put strip. Size. Zero DTE call sign. Size. AMD. Long dated. Zero DTE. Zero DTE.
Netflix breaking out. Netflix breaking out. Netflix opening range breakout. Pushing a bit higher. Okay, we got the Fed in less than 2 hours. Rate decision in less than 2 hours. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is 12:09 p.m.
NVIDIA pulse. Long dated. Zero DTE put strip. Size. Tesla pulse. Long dated.
SQTD.
until we can see it tangibly in front of our faces, we'll continue to ask those questions.
Sorry, go ahead.
No, I'm just saying with Meta, just for what, is that, I mean, they started with open models, right? They started with that and now they're like, that doesn't exist anymore. And like they're spending all these companies are spending all this money, hiring all these people in the US, spending billions of dollars on these pay packages. And I go back for what? What is the output? Because I will say with Microsoft, Copilot, I wish it were different, still feels like Teams. That's why I use Zoom. And like until Microsoft can make Teams like Zoom and Copilot like Perplexity or Claude, even though Microsoft uses Claude, they can't filter it right. I think Microsoft's going to be in the dog.
Let's go to Meta, which is also down on the year. It's also down big from its high. That is a stock chart that represents questions, right? The volatility of a spend for what? Are they going to have now a cloud business too? I don't know. Weiss?
Yeah, so look, first of all, through all this, I violated one of my personal investment tenets, which is that never get in front of a CapEx cycle. And here I've been in front of the CapEx cycle, on Meta, on Microsoft, and it hasn't worked out particularly well. I mean, I'm not suffering in stocks, just not performing. So that's the first thing. So look, with Meta, I have a lot of faith in Zuckerberg. I do think he is a visionary. I do think he looks long term. I do think he's the best navigator of troubled waters and the quickest to say, you know what, I made a mistake. We saw that time and time again. Going back to mobile, right? Way back, it was at almost a decade ago. So I'm comfortable there. It doesn't mean that short term the stock's going to do well. I think there's still challenges, but I do believe.
And this is another one we're watching with CDS, like with like we used to watch, like talk about every day, the Oracle's overall.
Yeah, and I'm not really concerned about CDS. To me, CDS, if you're looking at a Lehman type situation and a Lehman in particular, the risks there.
I don't think we're talking.
Right. No, we're not. My point is that I don't see the correlation to where the CDS trades to what's happening with the fundamentals.
No, not at all. But if nothing else, what we just showed you, the CDS is a representation of where investor concern has risen to. That you might as well have Meta investor concern rather than Meta 5-year CDS.
Yeah,
because that is what that chart represents, doesn't it?
Yeah, it's like what the VIX used to do for the market, right? Here's the VIX and volatility and
Microsoft turning back down.
There's a huge hedging aspect, which we have to all that's complicated. I do think what Meta does so well, and I think it's great, right? They're going to start leasing out like Elon did with their data centers, leasing out some of that capacity because it's not being used. What they do so well is their targeted ads on Instagram and Facebook, etc. Their Ray-Bans, they're now expanding that product is a home run. And it's like if they were more focused on, I promise you, their Instagram, their ads are going to be awesome because that AI is working. But this other aspect where they're spending this money, I think that's where the jury's still out. Is what am I getting for all this money? Just focus on what you're amazing at. I think the stock would go much higher.
How about this fact? Outside of Apple, which we listened to all the conversations about what their valuation has risen to. A lot of these valuations for these names are at multi-year lows.
Yeah, Meta I think is a forward of 15 times. Nvidia's
Meta's like 19, Microsoft's 21, Nvidia's 19, Amazon 27, Alphabet 25.
They are certainly on sale when you look at valuation. I think the conversation tonight from Meta is really going to try and pivot towards the cloud and the introduction of the cloud. Let's remember something. Last quarter they beat on earnings, they beat on revenue, stock went down. Why? Market didn't like the CapEx. So they're going to try their best tonight to steer the conversation away from CapEx towards, guess what? We brought on Dave Brown. He led Amazon's cloud business. He's an executive here now. He's going to lead our attempt to lease out on compute. We potentially have a relationship with Anthropic. They're going to try
and steer it away from the CapEx as much as they want. Every analyst question is going to be about CapEx.
Yeah.
Yeah, can you guys take a second on the valuation? Like, do not get, I don't like PEs, but do not, viewers, get lured into these lower PEs because Google, since 2015, has been positive free cash flow. They're negative free cash flow. These companies for 15 plus years have been capitalized, high margin, buying back shares. These companies have fundamentally changed their stripes.
And so I think you have to look at the valuations in a whole new lens because we don't know, like you said, you don't want to get from a CapEx cycle. You don't know when that's going to turn. I mean, Google Cloud lost money for years until it didn't, but it was one vertical. These companies are putting all their chips on. And that's why Oracle's been like one of the worst performing stocks. They put all their chips on OpenAI. And so I don't think you can look at the valuation of any of these hyperscalers and have any lens on what the future performance will be based on history.
But the rest of the world is telling you, and I mean semis and memory, that the CapEx cycle has peaked and is going to recede.
Well, so that's what some are looking at the activity in semis and trying to suggest that.
Yeah.
That those are, you can look at the charts and make the argument that those are signs of a top.
Yeah. Yeah.
But the spending would have you believe otherwise.
Well, there's always a let me put it another way. The stocks always trade down in advance of when the spending peaks. So spending will keep going up for another year, maybe even 2 years, but the stocks will peak anticipating that. And that's why I sold those that I sold, because I didn't want to be the last one out.
I mean, the Korean market just continues to get hammered. I don't pick your appropriate word. I was, looking at Hynix earlier, which I think had turned green. Now it's down almost 4%. A lot of the other names in the group, did you see Micron now was down 7%? AMD is down 7%. Why is the NASDAQ getting weaker as we were coming on the air today? Well, that is largely a representation of that. KLA beat. Shares were not higher on that. There's the stock down almost more than 9%. What's up with that? As Lam reports today too, which has been overshadowed by all the hyperscalers that are in the news.
At 9 o'clock Eastern tonight, we're going to hear from Samsung. They already had the preliminary report. We'll get the full report tonight. So in the case of KLA Corp, they are in the midst of their worst month since 1987. Stock is down 38% this month. Guess what, though? The stock is up still 50% on the year. This is a subsector of the AI trade that went parabolic. We've talked about that. Positioning and sentiment went the direction of just being extreme. We're working off those extreme conditions right now. If you want to look at the overall market, you can make an argument that as long as oil stays under control, you get the broadening out narrative and it's healthy for the market. I understand that. But at a certain point, when capital moves away as significantly as it has, you can't expect a V-shaped recovery in a lot of these semi-equipment names. So in the case of KLA Corp, the quarter was okay. It wasn't as good as it needed to be when you have such high expectations. I'm looking at it. Revenue, 7% on foundry and logic division. That's not enough. They need to be in high double-digit territory.
Can we talk about another AI stock? That being Caterpillar. You guys want to go there because it's been treated as if smiling over there, but it's been made an AI stock, hasn't it? The stock's down 25% in the last month. It got downgraded today to neutral at Baird. Target goes to 900 from 1200. What's that a sign? What is that chart a sign of?
I don't think your analogy could have been any better, because if you look at the explosion, it paired an AI trade, and here the similar sell-off. You sold it, Steve. Congratulations. I think that was the right call. I think the $900, $1,000 price range is still there for the investment thesis. But if CapEx is peaking, and that doesn't mean it has to roll over or come down, if it's not increasing exponentially, that's why we're seeing all of these things that are cyclical in nature selling off to the extent that they are. So Caterpillar is not a one-trick pony. We're going to hang on to it. But I think the call is correct, and I don't see the stock going back to 1,200 anytime soon. But I think 900 is certainly in the cards.
You think CapEx is peaking? All of the numbers would suggest otherwise. Most of the commentary still thinks, when you ask people, well, it's a third inning, fourth inning.
I don't think it's the third inning. I think it's the seventh inning. I don't think it is peaking to the extent that it won't go higher, because I do think over the next year it will appreciate.
Is this the stretch and we have a song and then we resume the game, or what?
Stand up and take our hats off, because this is the seventh inning stretch. They're going to go a little bit higher, but not exponentially. And then to Steve's point, they're going to come back.
Netflix still trying to move here. Apple just
just
below VWAP.
The government restrictions. They mentioned New York State, the moratorium on building out further data centers. I don't know enough about that to don't hold any. Okay, so don't go elsewhere. That's not to me the impediment to continuing CapEx.
Netflix pushing a bit higher.
CDS market, yeah, that's the impediment yields, put yourself in a precarious position where it's not advantageous to access the debt market, then you're going to pause on the capex. I think the order book for Caterpillar, it needs a reset. I think the entire industrial sector, and you could go to GE Vernova, you could look at Vertiv, same type of example here. It needed a reset. The order book still has demand there, but to the extent of which we were paying the premium for these stocks just 6 to 8 weeks ago, I don't think it's warranted.
All right. Oh yeah, there's a Fed meeting, and I mean a Fed decision at 2 o'clock this afternoon, which is intriguing for all the reasons other than what actually happens today with rates, despite a market that has 20, 30% or whatever it now is built in that there's going to be a hike today. Descents, we'll see. Forward guidance, does it totally go away? Comms by the Fed, task force, more on that. Goldman today says we're set up for the biggest Fed day surprise since 97, whatever they do, right? Because usually if there's going to be a move up or down, the market has so anticipated it that you're not at 30%. And now if they don't make a move, well, how could you be at 30% and then they're not going to make a move? How do we see what happens this afternoon is impacting this market?
I think there's a very low probability, obviously, they raise rates. His first meeting. I think, we have to give, Kevin some rope. He's in a new position. He's obviously a veteran. But I think, you can give no guidance, but you have to build out your case. And so I just think it's going to be interesting that all of us are going to be listening. There's low probability of a rate hike. And also if you think through the inflationary pressures, there's really nothing the Fed raising rates is going to do about oil prices, raising rates is going to do about data centers. When you actually go into a rate hiking cycle and you're trying to slow the economy, it's a lot of it's to do with lending. And I think everyone would know this. Lending is not easy right now. It's not easy to buy a house right now. So at the end of the day, no rate hike, but we're going to have to get used to his Greenspan type, of commentary where it's lack of commentary and we're all left guessing, which I think it makes it more interesting as a market. And we'll see what the Jeff Dunlocks have to say, after he speaks.
As always. What happens, Weiss, if there's just going to be less commentary? That you all are going to have to make many of your decisions, if not, in the dark, at least with less light.
You know what? I've always been a fan of that. I don't want them to constantly talk about the sauce, how the sausage is being made, and it's being made differently every week, depending on which Fed head talks. So I'm in favor of that because I also think that what they talk about in between meetings biases what they say or do at the meetings. So I'm in favor of that. The market's just going to have to get.
All right, there goes Netflix.
Figuring it out for themselves.
Netflix ripping now.
Could it cause more volatility? I actually think it'll cause less volatility in the market between Fed meetings. As you get closer to the meeting, the volatility will increase, but I think it's a good thing for markets to have them just, keep some things to themselves.
Here's a different take on why I agree there'll be less volatility, because I think that the market is very appreciative of an independent Fed. And there was a lot of concern with Kevin Warsh going in that maybe this is more of a.
There goes Netflix.
If a few weeks is any indication.
Pre-market highs coming up.
And I think it's a fantastic person, the right person, and the right policy.
Yeah, but some are saying, well, wouldn't he, initiate a shot of independence by actually hiking today?
Good.
But the other side of that is, well, then you cut off your nose to spite your face, because then you've surprised the market so much that the market reaction.
Google turning back up.
Then what do you really get out of it? You raise your hand and say, "Hey, I'm independent." See,
I don't think the board of governors would vote for it, but I'll bet you he'd like to do it.
There could be some interesting dissent.
I think they would like to raise.
Somewhat, some probably.
I don't think it cures the problem, though, because if it relates to oil and a flow through for oil, hiking rates really just isn't going to do anything. That's all about Iran.
If they keep the market on the edge of its seat, then maybe a rate hike is coming. Not today, but in the future meeting. What's the effect on the dollar? I'd love to hear from Jeffrey when you talk to him today. The dollar has been rising. International. You notice the Nikkei is down 12% this month. The emerging markets are down nearly 10%. So a higher dollar is going to have that punitive effect on capital and leverage moving out of those markets.
Right. Let's squeeze a break in. Let's do that. And then we will talk about a payment pump. One halftime committee member is making a move in a name that's rallying today on its results. We will reveal that. We got a lot more ahead too after the break.
All right. If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Wednesday, July the 29th. We got the Fed rate decision in just over an hour and a half. Watching Netflix move higher. Netflix is on the move. Netflix is moving higher.
ASVP may rise in 10 seconds. ATHR may rise in 10 seconds.
Call diagonal. I put that in for about 12.70, probably trading a little higher than, yeah, trading $14 already. So
COR. COR. COR.
All right. Netflix still at the highs here, pushing a bit higher. Pre-market high. Nice little pop. We got Amazon turning up, Google turning up, all of these looking better. Google also up. I did sell some put credits. I mentioned that yesterday, I believe. Sold some put credits on Monday. The 135, 330, 315, 315, 310s. 315, 310s. Okay, that looks good. 315, 310. Okay, Netflix looks good as well. We've got Microsoft turning back up. It's got earnings tonight. Amazon is turned up. Amazon is turning up.
$430 from $410. Why'd you buy?
Amazon looks good.
We were thinking 400.
Still need to get back above the 200-day.
And this is a story, I think, of the entire earnings season, Scott. It's have and have not.
S&P's finally got the turn. S&P finally turning back up.
This report was unbelievable. Payment volume was up 10%. Processed transactions up 10%. Cross-border volume up.
S&P is back, moving back up now.
It's also a tale of the consumer. Consumer's not slowing down. This is a great story.
Okay, Amazon is definitely on the move here. Amazon,
It's fantastic.
Okay. From penthouse to outhouse.
S&P 500,
So this is
turning back up. We've got a trend line to deal with here, S&P.
risk. My thought process here is, sometimes good things happen to cheap stocks. And I look at this like a year into the future, we may all turn around and say, man, we could have bought Netflix in the 60s. Why didn't we? And this is a story where right now
S&P is breaking higher. Okay, there's the S&P breaking higher.
This is a story that I think is getting cheap enough that I look at the turnaround over the next 6 months, maybe 2 quarters.
Can we broaden that out, please? To show what I'm talking about, right? This thing was at the top of the mountain, and now there's very few.
There goes the S&P. Okay, New York Fangs are all turning.
Bait stock within the market, and I feel like the naysayers have been winning more than the boosters.
Dip buyers here.
But I think it's a good buy at $7.
What do you think?
I've tried to buy the stock several times. I've traded around it, gone in, gone out. I think it's a replace of all the streamers. Costs are going to remain elevated. Competition is as intense as we've ever seen. And there seems to be the fixation on live entertainment and live sports. And with that comes a significant price tag that they all are going to be competing for access to.
The market had reported those moves
SpaceX.
by Netflix before. It loved the idea that it
SpaceX turning off the low.
In the NFL, and then it was expanding into other live sporting events. Now we're questioning that because of what it costs.
I think over the last 18 months, and that's where you really
Netflix. SpaceX looks good. SpaceX.
That's when you began to see the moderation in the revenue growth. That's where you began to see that the earnings reports were coming in just good enough, not exceeding the expectations like they were prior to June of 25. I thought prior to June of 25, you had some really blockbuster earnings results.
If you look at it today.
All right, Snowflake above the opening range high. Netflix above the opening range high. Microsoft above the opening range high. Look for these to follow through, perhaps.
But I think like Uber and Netflix from a long-term hold, you really need to trade these names because I agree with what everyone said. But I think at these levels, it could easily be an $80 stock on no news, and that's up 1% when the Dow's down 850 points. To me, is like a good defensive outside of AI, outside of all these other things that's working.
I think the biggest issue for me, and I sold it mostly out of boredom. I didn't see it going anywhere. I want to be more cash. The company said we're worried about growth. So there's got to be a reset of how the market thinks about it. One, and to your point about the NFL, they haven't seen any major uptick in subscriber growth since they went into the NFL, and they're going to spend more. So that's become more of a cost admission than a growth driver.
Maybe investors are also somewhat questioning what their quote unquote game plan
exactly
is, because if you're involved in the bidding for Warner Brothers, and then I think there was another story that they were maybe interested in something else. What are you getting at? What are you after here? What was a stated grow organically rather than by acquisition that the company even laid out in its own words at one point in time? Has that changed? Like, what is the end game?
It's a legitimate criticism because the identity has shifted. We're not going to make an acquisition.
Okay, Netflix, they're pushing this a bit higher right now, pumping Netflix on CNBC.
But they also said they were never going to do ads, and they changed. That became very profitable. This next acquisition is going to cost an arm and a leg. They have it, and can you imagine Sunday Night Football on Netflix? I think that's coming.
They're not clear on their own strategy. For example, now the rumors are they're going to be offering the ability to subscribe to other streaming services on their site and try to clip pennies there. So until they know their strategy, until they can express it, I'm just not going to.
Apple TV, Amazon Prime, the market share of leadership that Netflix had 2 years ago is not the same today.
I'm sure it's still up. We'll take a break. Santelli's on the other side. It's midday word next.
Demand is up significantly. When you look at how well they did last year, their advertising revenue was up. I think and they were spending more money per ad. And so you can kind of see overall how Meta is shaping up here. Of the advertising demand that we track, they're number one by far. In fact, they're the one of two that are positive on a year-over-year basis. So they're doing a lot right, and I think a lot of it comes down to a lot of the investment that they've put into all the compute and the AI infrastructure, because they're super intelligence labs have taken AI, and now it's allowing it to target individuals and lift returns, and that return on ad spend, that's a big number. We're seeing that companies are reporting that going up and up, and of course, if you're advertising somewhere and your return on your ad spend is going up, what are you going to do? You're going to advertise more, and if everybody's doing that, the prices go up, but you still pay more. And of course, that's how you see a company like Meta do so well on a quarter-over-quarter, year-over-year basis. And so we're fairly bullish on them, especially at these prices. I think that's really the key. Is this is not touching all-time highs. This has pulled back quite a bit. And I think a lot of the pullback is just based on how much capex they're spending. I mean, it's twice what it was last year. We're talking about massive numbers. I think it's 125 to 145 billion dollars is what they're expecting to spend this year. And investors, I think sometimes investors see that as an expense, as compared to an investment. They're showing that this is turning into real returns with the return on ad spend increases through their AI infrastructure plays. Plus now they're able to sell some of that compute. We'll see if the deals go through, but they've got Anthropic's talking about buying $10 billion worth of compute from them. So that's always an option. It's an asset that they can use, and they can either make their clients, the advertisers, do better, so they'll spend more, or maybe they can sell some of that compute. So I don't see a big problem with it, especially when they're making as much
long
money as they're
dated,
making. I think
deep calls.
when you take away the one-time tax charge, they made $19 billion, and so we're talking about
Marvel,
we're talking about spending more
long
than they're making
dated.
in a year, but they're still doing just fine. They've got a little cushion there, and it's starting to definitely pay some dividends as far as that investment goes. So I think a lot of those fears are overblown, and if they
long
raise it
dated,
slightly, it wouldn't
deep
spook me as an
calls.
investor. I just want to see that all of the folio data is true, that all of the the demand from the client side is up, and the demand from the advertiser side is up as well. That's what we've got showing. So this is a healthy company at a discounted
long
price, in my
dated,
opinion.
deep calls.
And the portfolio data is overwhelmingly positive. And this is a company that, who knew that Instagram could become what it's become? We all knew that Facebook was popular. We didn't know it'd be this popular, but we knew it was popular. It was Instagram. We always had doubts about their ability to monetize Instagram. Now they've clearly done that. And Instagram is becoming its own force in social media.
Zero DTE.
It gets to
Calls.
this next moment. I was reading this morning about when Amazon came out with AWS. It was 2006. And some of the news releases that we're seeing from Meta feels like we may be having like a Amazon AWS moment for Meta, with them actually getting in that business and creating
Micron
another business.
pulse. Long
We know
dated.
they're dominated by advertising. Advertising is going to pay all their bills. But other than the perception that Mark Zuckerberg can't control his spending, this is a company that is doing incredibly well. And if they could initiate like a year of efficiency 2.0, this could be an explosive earnings release, man.
Yeah, and you know what? They're on that path. I mean, they
Micron
cut 10%
pulse.
of their staff,
Long dated.
and then they took another 10% and they moved them over into AI. And so they really restructured quite. Just doing extremely.
All right, Netflix pulling back in. That's kind of an odd move there.
Then you have the, I think, understandable tension buildup ahead of the Fed, ahead of Meta Microsoft this evening. Absolutely have to leave open.
S&P trying to bounce.
Can be clearing events within 2 hours' time that we've sort of done enough to get worried about these things. No matter how they break, maybe we can have an attempt at relief. That being said, I've always been a skeptic of broadening is salvation for the market, and I'm surprised that the semis are down 25% in like 4 weeks or 5 weeks, and the S&P is within a couple percent of its all-time highs. I give credit for that, but the weakness in banks today is a little bit of a different story. So I think that is all about the Fed, kind of the what-if trade about what might happen with that decision today.
What are you thinking about the Fed and what may happen later? The biggest intrigue, not really about what they're going to do on rates today, but almost everything else on the menu.
Well, I mean, I think there's actually more intrigue about the rate decision than you would ever expect to see a few hours ahead of time. 1/3 chance is pretty high. I still don't necessarily think the logic chain gets them to a hike. If you look at where things were in June, oil's really not any higher, and it went much lower in the interim. You had better CPI print, so it doesn't really follow that they would move today. It would be a gesture. It would be a let's get it over with type of a move in establishing. By the way, almost all Fed chairs have hiked, aside from Janet Yellen, within like 2 months of when they got there, because that seemed to be the thing to do. So I don't think they're going to do that. I think it's much more about the market wanting to have some way to get its arms around what decision-making process is down the line. Obviously, if Jackson Hole before the next meeting, there's a lot that we're going to have to process. But bottom line is, if Warsh thinks that the market's been too dependent on the Fed and the Fed has calmed Wall Street at the expense of Main Street, he wants a more volatile market, maybe that doesn't, appreciate quite as quickly. I mean, I don't know. That seems to be the what you might get here in the short term.
I think the markets probably want to, little rules of the road just to understand what it's going to be like in the meetings and years ahead. Michael, we'll see you this afternoon. Thank you, Mike Santoli. Calls of the day next.
All right, the S&P is trying to bounce. Right now, it's still in a descending pattern. S&P 500, still weak. We're below the 50-day. We got the Fed coming up here shortly. Your guess is as good as mine how the market's going to react. I was hoping for a bit higher, closer to 7,400 maybe, to buy some hedges. I still have VIX calls for September expiration, so those will be somewhat insulating if we do drop any more and we get a spike in VIX, which I'm anticipating we might see. Core 1M is down, or I should say Core 1M has moved back up. It's at 10.5, 10.5, so that's good. That's telling us calls are no longer super expensive. We got the stuffing knocked out of a lot of these chip stocks. Looking for opportunities. Okay, we just got rejected. S&P 500 lower high. Oscillating around 73.50. Netflix pulling back in. Core 1M is pushing a bit higher as stocks pull back. We got 200 stocks advancing on the S&P. Only 40 on the Qs, 40 out of 100 are advancing. Breath pulling back.
In 2027. So there's cracks here, and I think that's why the stock diversion has been taking place from what maybe their data has. But Kevin, you look at this one, the stock's off about 25% from its all-time highs that we hit.
IBM.
AMD poll. Long dated.
IBM, nice bounce so far.
Just about 600, and there's 25% of the company gone in terms of
From the watch list, Packaging Corp. All right, that dropped a little bit today. Centos. Centos looking pretty good. This is an economically sensitive stock. 1 million customers, more than 1 million customers worldwide. You've all seen the trucks delivering uniforms and corporate identity products and materials. When it's moving higher, that's telling you economic conditions are improving, hiring is increasing.
So for a modest amount of debit, it's still risk. There's still risk. Anything you buy is at risk if the stock were to go down. But for $270, Tom, you can get exposure to the upside in Meta platforms that could be a pretty substantial winner if it were to go towards $640. Tom, and the last thing, the 200-day moving average right now on the Thinkorswim platform, $636.
Yep, good point there.
Meta's on the move here. Meta's starting to pull up. Meta has earnings tonight.
Which is plus or minus $46 in either direction.
Meta with earnings tonight.
Platform, and what does that equate to? About $45 plus where it's trading about $590. It's just near or about that 200-day moving average also. So this sets up with about a 1 standard deviation to the upside if you think the stock is going to rally. Kevin mentioned, you're shooting for 640, but you got a nice wide range between probably 600 and 690 that you're going to be potentially profitable on this one. But let's break it down to August 7th weekly options. Expires in 9 days. Buy that 640 call. Sell that 640 call. The July 31st weekly option. 1 week wide.
Zero DTE
call
puts.
calendar here. You're paying roughly
Zero
$270.
DTE puts.
$70 per spread with a nice wide range for the stock to trade in. What you don't want to happen is the stock to go lower or the stock to go up maybe $100 or 2 standard deviations to the upside. That's when you'll start getting.
All right, Meta is still driving a bit higher, so it's probably just shorts covering in here.
Selling because of that event risk that's built into this one, and this sets up about with that 1 standard deviation.
Centos. Okay, we left off with Centos. Smuckers, SJM on the watch list, looking good.
This is a nice risk reward on this type of position.
Meta, Netflix, S&P 500. S&P still trying to do something here. Not good below 7,400. We want to be back above 7,400. I don't think we're going to get there, but we could get there after the Fed. We could also be much lower after the Fed, so be aware of it.
Micron Pulse, long dated. Micron Pulse, long dated.
Money. So first thing they do is delay purchasing.
What about Garmin?
Wow.
They had earnings too.
Yeah, quite a move. And that's really about the diversity of the products, the wearables, it's in aviation, it's in marine, auto, golf, all of it. I think it's at a record high today. Correct me if I'm wrong, it probably is. Happy to maintain that position. And I find it record high, you're probably wrong.
Which were you?
It's not good.
It's not 19%. You should, no matter what, you should be happy. So I just want to clarify.
Zero DTE puts.
All right, options action on Meta and Microsoft.
Q's Pulse.
Okay, Amazon's going here. Watch Amazon. Amazon catching a bid. Amazon catching a bid. Watch it.
Q's Pulse, long dated.
Google as well. Meta.
SPX Pulse, long dated. SPX Pulse, long dated.
Amazon's been choppy, popped up a little bit there and then pulled back. Watching the S&P, if it breaks this downtrend, we'll know it pretty soon. We got to get it back above 7,400. That's a big task. Big task to get back above 7,400. We might get there. Might get there.
SPX pulse, long dated.
S&P 500 turning back up. All right, S&P 500 continues. All right, so we're breaking a downtrend. This little downtrend that started once we lost 73, 75. We bounced back up to it, got rejected, descending pattern. Starting to break above it now. $7,400 is a big task. We got VWAP overhead as well. So hedge flows are starting to turn up. We got resistance overhead at 74.75. 0 day, there's nothing overhead to keep us from moving higher except for the Fed rate decision. Imagine most traders are expecting more downside.
Spider pulse, long dated.
S&P starting to move.
AMD pulse, long dated. AMD pulse, long dated. SMH pulse, SMH pulse.
SCH. SCX. SCU.
SPRC.
SMH pulse.
SCH. SCU. SCX. SCH. SCU. HEQ. SCX.
Micron pulse. Long dated. Q's pulse. Long dated.
SCU. SCH. SCX.
SpaceX. Q's pulse. SPX pulse. SPX pulse. SPX pulse. Long dated. SpaceX. Nvidia Pulse, long dated. SMH Pulse, long dated. Deep puts, SMH Pulse, long dated. Deep puts, SMH Pulse, long dated. Deep puts, Tesla Pulse, long dated. Tesla Pulse, long dated.
Do note the S&P hedge flows have turned up. Hedge flows have turned up.
Long dated.
S&P hedge flows are turned up.
AMIX.
All right, looks like we might go some more here.
Zero DTE, call side. Size.
AMIX.
S&P on the move. All right, S&P is on the move, heading into FOMC. We got about 55 minutes to go. We're at VWAP now. 7,400 is within reach. Okay, Amazon's at highs, Apple turned back up, that's good. Google at the highs as well.
Soft pulse, long dated, deep calls. Zero DTE, call strip. Size. Zero DTE puts. Size. Soft pulse, long dated, deep calls.
The guidance suggests, though, that demand is accelerating rather than peaking. That's also something the street likes to see. Expectations, though, were pretty high. And I will say that the entered
Zero
earnings event
DTE
with their shares on pretty
size.
zoom out. I mean, so
Amazon
obviously, subset
Long
is
dated.
enough to still justify
Zero
their valuation.
DTE
But
put
also
strip.
concentration is the way they risk.
All right, rejected at VWAP for now. Futures continue to rise. Google 336. Let's take a look at Google.
Micron cost. Long dated.
Google looking pretty good here. Off the 200-day. This is day 3 above the 200-day. Google
Amazon.
got Meta earnings tonight. Meta earnings. Meta, they're looking at about an 8% move on Meta and about a 5% move or 6% move on Microsoft.
Spider pump. Zero DTE put strip.
Seagate had a blowout earnings. It's holding pretty well, considering a lot of stocks have pulled back. S&P at VWAP.
Spider pump.
But now we shift into more of the names that are seeing some of that pressure post their quarterly earnings. And we will look no further than inverted holdings, which is down now 16%, making it a very reminiscent.
Amazon pump.
Today, we did see still things to like. I mean, strong earnings, just earnings beat expectations, 16% from last year. Revenue punched 24% year over year. It's about 8% that organic growth. Reflecting this further.
Those 7400s from earlier, they're $18.20 right now. Looking for a follow through.
Zero DTE put strip.
Tesla turning, might give a buy signal on Tesla at the low. Tesla's trying to turn the corner. Tesla down here, turning the corner. Intel had a good day yesterday. Bouncing again. SpaceX, can we get a day 2? Looks like Scott Rayler is trading SpaceX. Cerebras, CBRS, Cerebras, tested yesterday's low. NVIDIA trying to turn, trying to move back above the 200-day, NVIDIA.
Zero DTE put strip.
Netflix, off the best levels of the session. Netflix, S&P 500, getting rejected at VWAP for now.
Q's pump. Q's pump. Q's pump.
S&P trying to get above VWAP.
Zero DTE right now. Stop.
S&P trying to stay above VWAP.
NVIDIA pump. Long dated. Meta pulse. Long dated. Triple semi-pulse.
Yeah, no.
Triple semi-pulse. Triple semi-pulse.
Extremely positive. The growth is tremendous.
Bloom Energy.
Starting spot in terms of where it was within.
All right, S&P is trying to push a bit here.
TFA. Long days. Deep core. Micron pulse. TFN pulse.
I know, but actually,
Long
now
days.
seeing it and
Deep core.
back at this day, seeing a decent comeback here. It's actually lower even in the last, 20 or so minutes in this day, but now come back ever so slightly. So the street not really sure what to make of these numbers, but to run through the positive, massive top line beat for this day. We saw revenue that rose 166% year over year. So crushing expectations. Not a shocker there. Huge earnings beat as well.
Hims and Hers is down 11.5%. Hims and Hers down 11.5%.
Solutions for AI data centers benefiting from right now power constraints facing hyperscalers. And so for that reason, guidance was raised materially. They lifted their revenue guidance to 3.9 billion to from excuse me, to 3.9 to 4.2 billion.
S&P is about to go here.
Also seeing some strong generation on their cash and balance sheet. It's operating cash flow also coming in pretty substantially higher on a year-over-year basis. Now, stock expectations once again were fairly elevated in this name after a massive AI-driven rally. That was of concern as well as their dependence on this AI infrastructure spend. But much of the story hinging on hyperscaler and data centers demand also is not necessarily a bad thing. When like criticism to those companies is how much they're spending, that they all have actually raised some of their capex forecasts, does not bode negatively for a name like Bloom. So I think again, signaling understand the space in which these companies operate in AI.
S&P is going here.
Towing the line between a clean energy alternative, but it's more that it can kind of just pump
Amazon
up these power
long
sources
days.
for data centers directly. Their initial deal with Oracle last year
Amazon
and their ability to kind of
long
execute on that
days.
faster than expected timeline allowed Oracle to really believe in them and kind of scale up
Amazon
their relationship. Well, other
long
companies took
days.
notice of that and have also partnered up with them for those needs. In a time where these companies are signing massive 20-year-long deals and doing anything to take advantage of this time to try to get ahead by scaling up their data center and compute, the need for power is tremendous. And the fact that they're able to kind of use natural gas and other sources, I think gives them a different, kind of leverage.
All right, trying to push a bit higher, S&P.
Yeah, that's true. And also I think that is also
We got the Fed in 40 minutes or so, 45 minutes. Netflix turning back up. Netflix, all right, all the New York FANGs looking a lot better.
Zero DT. Cold.
New York FANGs looking a lot better.
It's not even just energy names. It's not just AI infrastructure broadly.
Zero DTE.
From a
Cold.
momentum standpoint,
Stop.
beta momentum based off the basket of stocks that Goldman has within that cohort
Apple
right now
Pulse.
is on pace for its
Long
worst
days.
month. That's going to
Zero
include
DTE. Cold.
that's going to include 2008, 2009. That's going to include tariffs. That's going to include all of these things that have happened in our lifetime with these names. This 50% pullback in Bloom, or whatever the exact number is not unique to Bloom. The move that you're seeing in Vertiv is not unique to Vertiv. It's across the board, almost indiscriminately to earnings. And you throw in there some disappointing earnings like Vertiv, you see it's an escalating situation. You have good numbers like Bloom, it's like maybe enough to be up slightly. Maybe.
Zero
It's a good
DTE.
point. Actually, it's a good place.
Stop.
Even because we're going to discuss some other names that have also seen a pullback. As you said, it's not limited to these names. It's also right now reflecting in Lam Research.
Zero DTE. Cold. Stop.
1987. So we'll discuss more of these tech names though coming up next. We'll be diving into some ways to, of course, trade these stocks. For example,
Zero DTE.
technical
Stop.
ARM as well as Lam Research with earnings after the closing bell today.
Zero DTE. Cold. Stop.
All right, Google at the high of the day here. Google looking pretty good.
Zero DTE. Call. Start.
All right, we're higher here. Google.
Start.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Sure. This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, giant TV. It's everything in one place.
Okay, S&P looking good here.
Like,
We're going to get back to 7,400 before the Fed. Looks like it.
trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
Zero DTE. Call. Start.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network. Welcome back to Next Gen Investing. It's now time for the chart master. We are looking at the charts of two names for the earnings after the closing bell today. They are not Microsoft and Meta. They are ARM as well as
NVIDIA Pulse.
Okay, Tesla turned up. NVIDIA's breaking the trend. NVIDIA breaking the trend.
Technicals, Ben Watson, of course, our G chart master himself. And so, Ben, let's start off with ARM here. ARM has been actually the smaller move of the two of these names, down 34% over the course of the last month. It's still
Tesla looking good. Turning the corner, Tesla. Okay, Apple on the move. Apple's on the move here. Turning back up. Apple. Apple go time.
Space, specifically the semiconductor equipment, fab, wafer processes, testing equipment, those types of things. So you look at our holdings on the first almost 2/3 of the year, and you see this sideways trend.
There goes Apple. Apple. Where Apple goes, usually the S&P follows lately. Google, Amazon. All right, these are all moving higher. Amazon, Google. Okay, Meta. Earnings tonight, Meta. 8% move expected. Microsoft. Higher. Tesla turning the corner. Okay, S&P looking good. S&P looking good.
Zero DTE. Call. Start. Q's Pulse. Long date. Deep puts. Amazon Pulse.
Why in this era of enormously high chip demand, we're seeing the manufacturing
S&P 7,400s are $24 now.
Yeah, and even making a pretty notable move today, even of course we haven't even gotten these earnings yet, but I'm sure in sympathy with some of the moves that we were discussing on the top of our show because there's still some earnings today. And so with all this in mind, of course, and the fact that we're on the session today, off highs and ARM by about 48.5%. And let's walk us through how you think through trading this name for example purposes. Very difficult to gauge what will resonate well with the street right now.
Yeah, and it almost feels like if you really feel positively or negatively on this, it's like, I don't know how you can, because you talk about it with so many of these names. The numbers can be good, and it's not clear that the reaction will be positive. And so what I looked at most important, I think, is a risk-defined strategy. but it is short dated. And so in this case, when you look at
S&P climbing into the Fed decision. We got Apple ripping higher.
it's going to be $200 in this trade because a $2.50 wide
Zero
credit spread,
DTE
and it expires at the end of the
Stop.
week. So it's going to be really sensitive to this earnings release. It's 205, 202.5. If you collect 50 cents, you can make $50 per spread on that 200 in risk. So there's a 4-to-1 relationship there. Break even 204.50. You know, this is one of those situations where you can select strikes in many ways. You can do it based on
Spider
technicals.
pump.
You
Long
can do this
dated.
based off of risk reward relationship. You can do it off of, you know, how much credit you want to receive. You can do it in a lot of different ways, but in this
Apple
case, I look
Pulse.
for a 4-to-1.
Long
Try to
dated.
get as far
Deep
out of the money
call.
as we could for that
Apple
happen,
Pulse.
while
Long
also
dated.
containing that
Deep
max
call.
loss to
Apple
$200
Pulse.
in this case.
Long
So
dated.
one way
Deep
to look
call.
at it is neutral bullish,
SP
but
Expo.
really what you're hoping
Long
for,
dated.
Jenny, is the stock
SP
doesn't
Expo.
crash
Long
post
dated.
earnings, which in
SP
the case of some
Expo.
of these names, it's a
Long
big
dated.
You know, I mean, a lot of these things, you could look at, I mean, like a modest crash over the last month, but obviously not the same extent to which we've seen in like KLA, for example, IBM, and not even earnings related, I guess just guidance related. But we've seen some big moves in tech that we have been keeping on our radar, which actually speaks to our next theme a bit more, Lam Research, which is now pulled back, I mean, 40.5% this month. We're off the highs by 41%. We are still higher by almost 51% this year, but that unfortunately,
SMH Pulse.
I mean,
Long
research,
dated.
excuse me, is that it's more similar to a KLA Corp and ASML. And that's not having a great track record post these earnings moves. Both of those names have sold off pretty significantly after their most recent earnings. And so does give me an air of caution as we go into now Lam Research's earnings after the close today.
For sure. And you take a look at Lam Research, and this is a little bit different perspective than what we saw with our holdings, in that you saw that trend starting earlier last year and really
SMH Pulse.
over this time
Long
period,
dated.
now breaking
Deep
up through the
calls.
250
SMH Pulse.
for your two
Long
resistance
dated.
level again back up
Deep
into those
calls.
mid-400s,
SMH Pulse.
and giving
Long
perhaps
dated. Deep calls.
well-defined, if you will,
SMH
a killer
Pulse.
type of
Long
reversal
dated.
pattern.
Got a lot of nice movement here.
So if you're going to look where the price target is, just that measured move on this pattern, that would put it down around that 165, which was a level of resistance below.
Okay, coming into the Fed.
Long dated.
So if this goes to that pattern, which when you look at the trend, relatively quick pattern,
Zero
we could see this
DTE.
happen on this
Oh.
catalyst and see the continuation on the catalyst of the earnings announcement. But it does have a fairly solid level of support here at 250, where it's sitting at 257 right now, just above that level. But that's been tested once,
Micron
twice, 3
Pulse.
times here
Long
as a
dated.
resistance.
Tesla
You look
Pulse.
at where
Long
momentum
dated.
is. Momentum is still falling off, but it is not at the extreme, which you can look at it from this
NBIS.
perspective. Well,
Long
it's
dated.
not down in that oversold
A little
range.
profit taking on the S&P.
It's not extreme yet, so there could be more downward pressure here if it does break through this 250 area, Jenny.
Okay, and a good point. Actually making a very similar move today to, of course, the move we discussed in ARMS, down about 4.3%, a bit better on this session, but everything is waiting on the Fed, it seems like at this point. So we will continue to watch how overall markets perform. So appreciate it, Ben Watson, for always bringing the technical setup on our show every single day. And so now, last but not least, when we assess trading Lam Research here for example purposes, unfortunately, I'm tying them very heavily to like the moves we've seen in KLA and ASML. But obviously, we could see a totally different move, and that's the gift of earnings.
Yeah, and generally, these names that are kind of earlier in the supply chain aren't as volatile. Now, this is not the typical time, but very similar idea to what we looked at in ARM, but in this case, using the 200-day moving average as a support line potentially, and just sticking the spread below that. So it's 240, 235, July 31st, looking for $1.25. So a little bit more aggressive just based off that risk reward. It's 3-to-1 in this case. And so you risk 375, a chance to make 125, break even would be 238.75. So it's a neutral bullish strategy. It's a risk defined strategy. Most importantly, Jenny, and I think that's the part that we should highlight when we're talking about these trades at the moment. It's not, pretending to know what's going to happen or setting up something that's going to, make a tremendous amount of money if one thing or another happens, but trying to set up a probabilistic outcome where in several scenarios it can be profitable in some way, but also most importantly protects from a catastrophic move. And in some cases, you look at these and you say, oh, the stock's, lost 40-50% of its value already. How much lower can it go? Well, it turns out, a lot lower, as some of these earnings have shown. So one way to protect against those, sort of multi-standard deviation moves, whether it's a bear strategy or a bullish strategy, is to use a risk-defined option strategy if that makes sense for a portfolio, and that's what these do. So whether this stock goes through our shorts or our long strike by a penny or $100, the theoretical max loss is the same.
Yeah, I think that's so important to point out because as we look at these names, obviously a lot of them having their worst months on record or their worst months in, like at this point, like 30 plus years. Yes, you did rightfully point out you can still lose, like Lamb Research, for example, $256. And so obviously something to be mindful of when we assess your risk as we approach these typically historically high volume, high volatility type events that earnings have become for all of the, entire economy, but also more specifically these AI names. But we will leave it.
Okay, we got about 30 minutes to go. Fed rate decision coming up.
Change on the day. Investors are watching for signs that its massive AI investments and smart glasses push are really starting to become real growth drivers. So we'll preview the overall report and expectations up next. Reactions, earnings breakdowns, and hot takes. We'll teach you about stocks and market nicole on LinkedIn, Facebook, Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim. Award-winning trading platforms. Bring your trades into focus on thinkorswim desktop. Robust charting and analysis tools.
NVIDIA Pro, long dated.
Tailor the platforms to your unique needs. And customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
FMH Pro.
S&P trying to hold here. Stocks holding at the high for now. Amazon, Google.
Exactly where market matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond
NVIDIA Pro, long dated.
Stay connected to what moves markets. Download the Schwab
All right, Tesla, a little profit taking. Snowflake, Broadcom, Meta, Google, profit taking. Stocks are pulling back a little bit. Looking for the next dip to get bought. Back to VWAP now.
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up? My dad, he's been with Bob for a long time. Jim, my national, probably that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference. That actually cares.
Welcome back to Next Gen Investing. Now, Meta does report today after the close, with expectations once again centered on broader AI. Now, while advertising will still be very much a focal point, questions are also growing around its smart glasses business, which has emerged as one of its biggest hardware and further.
All right, S&P pulling back. Okay, back below VWAP now. It'd been nice to hold this level, put in a hammer, maybe reverse tomorrow after the Fed, or not. Looks like we're going to push back down now.
Always going to be the big two. What I'm really looking for is how they're going to get that capex back. It's no shock that this week they announced a potential $10 billion deal with Anthropic to rent Meta's compute. That changes the conversation narrative on their capex spend. All of a sudden, if that capex comes in at $33 billion, which they project, and you're having another major AI company rent that from you, that changes the narrative. So that's really powerful, and I think they're
Looking for a bounce. We'll see if we can get a higher high out of this. Higher low.
Zero DTE. Thought.
Meta might be a little bit concerned with the timeline of the ROI and some of this investment, that they may be considering some sort of cloud-like business around their excess compute they have. I think the case, I want your thoughts on this, Matt. This is what the question is going to be. Are they floating sort of efficiency 2.0? Do you think that might be something that comes up a little bit in this fall, especially after Google, which is slammed after being a little bit more aggressive with spending?
Back above VWAP now. Nice bounce. We got the Fed in about 25, 26 minutes. Fed rate decision. Most are anticipating steady as she goes. I think the markets have priced that in for the most part. Actually might be down a little bit compared to expectations with this pullback today or this week. We're still below the 50-day moving average. 200-day is not too far below. Let's see what the 200-day, how far the 200-day is. From current price action. From where we are currently, from the low of the day, that would be about a 4% move. From current prices would be about 5%. If we were to get this kind of 5% pullback, I would imagine VIX will spike. We have VIX calls for September. Okay, I got the 20-25 call spread. So if we get any kind of bad news and the markets drop, those VIX calls will help cushion our positions. Chips are still pretty beat up. At a minimum, we need to build a base. Okay. Micron, SNDK. Seagate did really well. Seagate Technologies actually bouncing now. Got a double bottom on Seagate, looking for a push higher. Needs to get above the 50-day. Broadcom needs to get above the 50-day as well. Been sandwiched between the 50 and the 200-day for several weeks now. Yeah, S&P looks like it wants to move a bit lower now.
NVIDIA plus long days. Apple plus long days.
Huge element of success because right now Google really doesn't release those numbers. OpenAI has said they're going to generate $100 billion in ad revenue by 2030. If you think GPT hallucinates, that's probably the biggest strategic hallucination I've ever heard. There is zero chance they can actually produce that. But Meta has the opportunity to pull that out and say, we have a new version of our advertising revenue
from just artificial intelligence that is growing. If they can do that, that actually opens up the growth story within advertising, which generally is a pretty flat year-over-year growth. They can only get market share. The overall spend doesn't grow, but it'll be really interesting how they position their artificial intelligence within their advertising ecosystem because it is best in class.
Okay, and so we've obviously seen, I mean, so many companies making some substantial, I mean, huge AI investments. Meta's obviously been one of those names, sort of hat in that ring. But how do they prove that these spending levels are now justified? Do you say like further, again, innovating their ad business? Is it also, this is the answer also advertising, I guess is my question here.
Yeah, I love the question, Jenny. I think it's tricky because right now the unintended consequence of investing so much because they wanted Llama, their original AI model, to be in front. Now, you might not even hear the word Llama on this call anymore, which was their open source model. They're now more closed source.
Zero DTE.
Spark.
Zero
But what
DTE.
I think might actually happen is really reiterating this Anthropic compute deal, talking about new Spark 1.1, because if they can make a case that all this massive CapEx expenditure for what they believed was going to be powering their model, and now they're back at the back of the race. If they can now say, we bought all this compute and we can rent it out at a high premium with really high margins, that becomes really interesting because the fact of the matter is 3.53 billion people every single day are on a Meta family of apps application. So they absolutely have mass adoption. They have an unbelievable advertising business. They touch so many different people in so many different ways. So if they can just change the narrative on that spend being rentable with high margins, I think that gives them a really interesting narrow path they can walk to, again, create a growth story that makes their whole story and this whole earnings much more interesting than just a great ad number.
Okay, Matt, love all of your takes. I'm really bringing the energy to what is a red sea right now above markets as we're looking at it. So a lot to be enthusiastic about for this report. Thanks so much for your time and bringing all of those expectations for Meta, a very critical watch item. Is Matt Meyer, founder of M7 Innovations. Now, coming up on the show today, the Fed is expected to hold rates steady today, but investors will be listening for any signs that another hike could still be on the table. We'll preview the decision and all the expectations up next.
My contact. Long day.
She's got your smile. Carl. Yeah, your number one broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. We have everything we need all in one place.
I can set up for college fund.
I've been learning about trading strategies. Schwab helps me generate
All this Schwab is everything you need. It's making me cranky.
Does somebody need a map?
Invest your way with Schwab. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Welcome back to Next Gen Investing. Now, the Fed announces its latest rate decision this afternoon, just in about 20 minutes from now, actually, with markets focused on Fed Chair Kevin Warsh's outlook for policy and any really changes, of course, to expect. But for more on the market's overall expectations, we are now joined by David Doyle, head of economics at Macquarie. So, David, what's the most important thing that investors should be watching today? And appreciate your time, of course, joining us about 20 minutes ahead of this decision.
Yeah, so I mean, look, normally when it comes to these meetings, or at least for the last several years, we've had a clear picture of what the decision would be in advance. But this morning and I guess early afternoon, it looks somewhat ambiguous. Like the market pricing, has hovered between 30 and 40% for most of the last few days in terms of the odds of a 25 basis point hike from the Fed. So we think the first thing to watch for is whether or not they do hike rates. Our view of Macquarie is that they'll stay on hold. There might be some signals in the statement that a hike could be on the horizon if the data evolve as many people anticipate. But the other thing we'll be watching for in addition to that is to whether or not there's any dissents from folks looking for a hike at this meeting, and if there are dissents, how many there are and for what reasons.
Okay, then, David, building on that, my big question coming in then, and I think you somewhat have answered this, but I want to get more thoughts on it. Given that landscape, that it seems like for the first time, certainly since pre-Janet Yellen, we truly have uncertainty in the decision. Like the odds reflect that, but I know we've come into some of these events maybe with 60-40 odds, but it's really felt closer to 90-10 on those days, even too, as some of the articles and things leaned us one way or the other. Does it really feel like a weighted coin then? And as a result of that, does it mean that we're probably going to have a little bit more volatility in the market reactions around these events for the time being?
Yeah, I mean, I think so. I think, in recent years, there has been some
Zero
ambiguity,
DTE.
maybe a day or two before the actual decision. Typically, what's occurred, in the past in those instances is that there's been a news article released,
Zero
often
DTE.
by Wall Street Journal or a publication of that ilk, that clarifies what the committee is likely to do, and that then pushes the odds back to close to
NVIDIA
100% or 90, 95%. But I think under Chair Warsh, it seems as though that's not likely to happen. He's indicated some disdain for the practice of forward guidance or making things clear in advance in terms of what the committee plans to do. So he's likely to steer away from that sort of thing. And at the same time, has steered clear in things like his congressional testimony and public speeches, public remarks, from making it clear what his preference is in terms of how the committee will proceed. So I think that this is, this could be the new normal in terms of what we're looking at. We'll see how things evolve under a Warsh Fed, but I think given his disdain for forward guidance, it's possible that this could be the first of many decisions where things are ambiguous, that even just 15-20 minutes ahead of that statement release.
I know, I'm actually kind of excited for that because I want some fireworks. I'm tired of these more tame Fed announcement type of days. But another theme that has remained resilient is the labor market. And while we've also seen inflation not fully return to their target. So which side of their mandate do you think policymakers are a bit more focused on right now as we go into, of course, this critical announcement?
NVIDIA.
So it does feel from the minutes, from public remarks, from several of the Fed officials, that inflation remains the key point of focus. I think the fact that we've had over 2% inflation for more than 5 years, that suggests that there's been sort of a chronic miss in terms of the target in one direction. And I think many of the FOMC participants and voters are concerned about that becoming sort of structurally embedded in the economy, particularly with gasoline prices staying elevated in the context of the conflict in the Middle East. So I do think that's front and center. But I do think the labor market, will become increasingly a point of focus in the months ahead. And our view is that that's actually going to be a good thing, right? It's going to show that the labor market is tightening, the unemployment rate is falling. And so as a result of that, the labor market will come back to being a point of discussion, a point of focus from the FOMC. But unlike what we saw in 2025, it'll be in a positive light, right? It'll be because the unemployment rate is falling, not because of fears that it's likely to rise.
David, last time we heard from Chairman Warsh in a Fed press conference, there was this hawkish surprise sort of reaction. But what we saw was sort of this, bear flattening in a way, where you saw short-term rates spike, but you didn't really see the movement on the long end of the curve. And I guess there's two interpretations or some sort of a combination of them, where it's that that policy reaction is either going to stifle growth or it's going to keep those long run inflation expectations from unanchoring. And you sort of see that reflected in
Netflix back up.
Do you think that a similar reaction could happen today, regardless if they move rates or not, if they come out a bit more hawkish?
Yeah, I mean, I think certainly if they come out hawkish, that should anchor, or relatively hawkish, that is likely to anchor the 10-year long end rates, right? So, in many ways, that's a move towards credibility. If you had sort of a signal that a rate hike was, even if it doesn't happen at this meeting, one may come in the meetings ahead. That will give the Fed credibility, and I think the long end yields will see that as being something that's credible and on inflation. And that will keep it, should keep it well anchored. I'm less sure if you would see, a spike at the shorter end. I think it's possible depending upon the exact nature of the language. The reason for that is just that in many ways, you've already had that hawkish surprise from Warsh. And the market's already pricing, I think, by the end of 26, close to 2 hikes. So you'd have to have a very hawkish signal in order for the market to price more than that and cause a material move up at the short end of the curve.
Okay, now as we, of course, look ahead to this announcement coming in just about 14 minutes, and this is a difficult question, but I'm curious at your thoughts. What's one message that could most change market expectations now for the remainder of this year based on, of course, this press conference?
So, I mean, look, that's always tough to predict, but I appreciate the question. I think if Warsh, somehow came across as being, very optimistic about the economy and started to, hint that it's possible that we see a series of rate hikes, even if he moves or if he doesn't move, or if they move or they don't move at this meeting. But if he suggests that rather than it being sort of a mid-cycle adjustment, which I think a lot of people now have as their forecast, which the market is currently pricing in, instead of that, it's something could be more meaningful from that in terms of a rate hike cycle. That could be something that catches folks by surprise and leads to a dramatic repricing for Fed policy expectations. Not just now, but in the near term and over the next 12 months. So I don't think that happens, to be clear. But that I think could cause a lot of people by surprise and cause a significant amount of volatility if he does message that.
Okay, and I like that. And I know it was a difficult question, but appreciate your answer and really appreciate your time today as we will, of course, be watching this announcement coming in just about 12 minutes from now. But David Doyle, head of economics at Macquarie Group, appreciate his time today on our show. But now coming up next, it's time for Under 30, and we are discussing SoFi sinking to a new yearly low as we are seeing some overall solid numbers within its print. But we'll discuss what is driving, of course, a 7% pullback today.
Zero DTE.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help.
Netflix moving higher. Netflix.
Email and in-platform chat. Trade brilliantly. It's Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Check, the options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List.
Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30, and we are looking at SoFi today, moving lower in response to its earnings that we got this morning, where we did see actually some solid numbers, but obviously taking a bit of a breather today, adding to its now 40.6% contraction so far this year. So joining us now for some more details on some of those numbers and what perhaps drove some of today's pressure, we're now joined by George Tillis, Senior Markets Correspondent for the network. And so, George, walk us through what stood out here in their latest quarter and what, of course, drove shares to, this new 52-week low today.
Yeah, first, if you look at the price action, you would say the results don't match what we're seeing in terms of selling in stock. There's a good reason why there's some selling, but there's also potentially some opportunities here I'll discuss in a sec. But if you look at SoFi's total top line numbers, they were actually quite good compared to the estimates. They posted $1.21 billion, almost $1.22 billion. That number beat the estimates, but also was up by 40% compared to last year, where they generated as a business for the quarter about $871 million. And then on adjusted EPS front, they beat the expectations by about a penny, 12 cents on adjusted basis versus 11. And that's about 50% better than last year, which was around 8 cents a share. If you look at, overall breakdown of the businesses, they talked about how lending was higher. The composition of that relative to total sales is quite high at $724 million. That was higher by 63%. Financial services platform also increased by about 28% year over year. There was some weakness in their smaller division, their technology platform, which includes their payments processing company Galileo. But nonetheless, other breakdowns include the number of members that increased to 15.8, up 35% year over year. Loan originations rose, net interest income was up 52%, and fee-based revenue continues to grow beyond their expectations. So the challenge, I think, is this one wasn't necessarily priced for perfection, but the context of the market, I suggest, matters, especially when you're dealing with growth companies like this. It's moved from a traditional student loan business to finance, banking, investments, insurance, as well as crypto and trading and so forth, brokerage services. But they're also growing their total loan volume as well as their total service volume. But the challenge lies, I think this is the sell-off is one, the market has been relatively weak, especially in the context of companies that are growthier.
Netflix trying to take out the high of the day.
Which is what SoFi is in the financial and insurance and investment world, but also the EPS guidance was basically matched for 2026 compared to last quarter at 60 cents. So they didn't increase the guidance for EPS. They did match it. And so we're seeing essentially maybe a little bit of an overreaction, to say the least, in the shares.
Yeah, George, they also recently announced, I think it's the biggest of the NIL sort of sponsorship things. They partnered with Notre Dame. They're going to have jersey patches. So they now got the big time stadium in LA. They got a flagship Blue Blood program for collegiate sports. So I don't know if that's indication of frothiness or not, but this was a stock that had kind of consolidated, and it looks like it might be breaking down. What do you make of the technical picture?
Yeah, so I was just looking at that because I was going to address it too, Alex. First, the company's still spending money to grow their business, but the issue is, and this is an issue that has been remedied, but the issue in the past had been that they weren't profitable. Share dilution created problems for the stock. They have increased the number of shares compared to last year, but the pace of that share issuance is declining. I think that's important because, based on the trailing 4 quarters, the company is profitable on net income basis. And earnings estimates, albeit again 60 cents this year, over 80 cents next year, are growing. It's not trading at outlandish valuation. So, in context to the question too, Alex, is the technicals. There have been in the past many occasions, and I'm not saying this is the case, where
Long
you see
data.
on days like
Nvidia
this, where
pulse.
growth stocks
Long
are being
data.
sort of liquidated or sold off. People are, selling first and maybe asking questions later. You typically can see a day like this where we see it drop down, another kind of washout day, and then a recovery. So in the context of maybe trading, just look at today's high or even the pre-market high, which I suggest is around $17. Place an alert, and if the stock starts trading above that in the next week or so, that might be the case where the oversold condition is short-lived and maybe there's a trend recovery in the name. But again, it could still be subject to declines based on market conditions.
All right, appreciate you, George. We're going to leave it there for Next Gen Investing. Of course, Fed announcement coming up, but that'll do it for us for Next Gen Investing. The watch list with even further Fed coverage is coming up next.
Amazon.
Schwab Bank Invest Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash
Amazon.
management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell,
Google poll. Shenanigans.
Get inside the minds of pro traders.
Nvidia
My point
poll.
is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
smart insights, actionable
Google
data,
poll.
veteran traders,
Shenanigans.
and trusted financial
Nvidia poll.
streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy.
Hi, Triple plus 800.
Zero DTE.
Good afternoon. Welcome to the watch list. I'm Nicole Petalides. It's 2 p.m. Eastern time. We are live at the New York Stock Exchange. It's Fed Day. This is an important moment in time. We have a big show for you, and we are moments away from the Federal Open Market Committee announcement.
You will hear their rate decision. We'll have wall-to-wall coverage. Hold, just as expected on Wall Street. The CME tool was noting that. We were looking at about a 35% likelihood of a hike, obviously more likely to hold. That is exactly what we got from the Federal Open Market Committee. Now we will break
Extreme
down.
high
It's
to third.
very interesting. Down 42 now. It's down just 25. The S&P, the Dow was down 766 points. Now it's down 665.
Okay, Fed rate decision.
Of the day, now that we got this.
There goes Netflix, S&P bolting higher.
I mean, there were plenty of people who thought Kevin Warsh may go out on a limb and really try and show his credibility with a hike to tame inflation. S&P 500 right now down 1874.10. The Nasdaq's down 0.25%. The Dow's down 1.2%. The Russell losing about a quarter.
There we go.
1%. Gold at 40.72 a troy ounce, gaining $33, and oil is sitting at 84.58 the barrel. So we're watching every single thing here on Wall Street, and the dollar 196.
Take some risk off the table if you need to.
Curious to see whether
Extreme high to third.
Extreme high tech.
now we will start to pull through the headlines in a big way. Can't wait to see all of those. And let me bring in Tom White, co-host of Fast Market here on Schwab Network, to discuss this great decision. Hold as anticipated. Though many are now waiting, okay, it's September. If it's not July, it's September. What are your thoughts here, Tom?
Yeah, 9-3 vote here. 3 dissenters, Hammock, Logan, and Kashkari all voted in favor of a rate hike. That was first time since 2016 that there were 3 dissents in the same direction over policy change. But not surprising that we're not seeing a rate hike at this point. Kevin Warsh just put the task forces into place here to kind of figure out what type of modeling that they should use. We've seen some CPI and PPI data, the PCE that's coming out tomorrow that's supposed to be below what we had anticipated as far as that trajectory to the upside. So that throws a little bit of a curveball into maybe their decision making at this point. But not surprising that they didn't hike rates. They're on a pause right now. CME FedWatch tool still, predicting that we're going to get a rate
Extreme
hike
high
in
tech.
September. Hey, if crude oil prices are down
Nice.
70, 75 bucks a barrel, they probably won't hike in September at this point, but we're going to have to wait and hear Fed Chair Warsh's commentary, because he's kind of put that in the crosshairs that, hey, price stability is going to be number one, and number two is getting that inflation down. He's stated that over the past 5 years, it's remained above their 2% mandate. He wants to get that down. And that's going to be the discussions that they're going to have. But, a lot of it, Nicole, depends on what the price of oil does over the next several weeks and a couple of months here until the September meeting. But we're seeing that positive reaction in equities. We're seeing, rates stabilize, that 10-year yield at 4.63%. That really didn't move at all. The dollar hasn't moved. It's gone a little bit lower. But yeah, a little bit of positivity here on a negative day for equities after the announcement. Now, we're probably going to see some additional volatility when Fed Chair Warsh starts speaking. The calm before another storm here.
Yeah, job gains have kept pace with workforce. Unemployment rate has changed little. The FOMC is continuing the policy of maintaining this current level where we are right now. You have the 3 dissenters. I called out 2 of them, Logan and Hammock. I thought Kashkari would be the other one, which is exactly what we got here. And the questions really, really underlying, and maybe one of the conversations they had, is what is inflation at this point? Is it what we saw back in 2021? Is it how
Hedge flows rising.
No, we're not necessarily seeing that. A lot of the inflation is coming from oil, which is fluctuating, which is volatile, which Jay Hatfield said, in fact, if this war ends in the next month or two, we're going to be back to $60 a barrel. So the inflation part is such a moving part that maybe they couldn't quite feel comfortable to sink their teeth into a hike today.
Yeah, I think one of the keys, Nicole, you bring it up, the volatility that we've seen in the energy markets. Yeah, that's why we have a core reading, right? If if higher oil prices stunts a little bit of spending, a little bit of growth, does inflation take care of itself? We've already seen positive numbers as far as housing and rents going down or stabilizing a little bit. That's going to definitely help. It's not going to help maybe food prices, apparel, some of those other things. But if we see that pullback, and we'll get the first read on Q2 GDP tomorrow morning, if we start seeing a pullback, maybe inflation takes care of itself. So by Kevin Warsh coming out with, the task force and trying to get this stuff worked into their model and see where it happens, where they're not making any rash decisions, I think that's going to be key moving forward here. If you say productivity growth and capital investment are strong, Kevin Warsh, he was part of, financing and things of that nature over the last 15 years of his career, early investor in Palantir and some other companies. He understands what AI is probably going to do, and it's going to increase productivity. Is it going to increase inflationary pressures? Well, that's yet to be seen, but most likely not. It's actually going to help a little bit. So, job market's pretty robust at this point. The consumer's still out there, pretty healthy at this point. So yeah, they've got a lot to discuss, and I think the September meeting is going to be one for the fireworks. But at the same time, if you take a look at where energy prices are right now, where will they be going into a couple of data points that we're going to get before that September meeting? I think that's going to be key, Nicole.
Tom White, thank you so much for breaking down this news with breaking news here. 9-3 vote that Federal Open Market Committee holds rates steady as anticipated, but there was a camp, and it was a pretty large one, who were saying maybe we would get a surprise rate hike. All right, let's get to the bigger picture. John Lonsky, president of the Lonsky Group, former chief economist, Moody's Investors Service, is with me now. Would love to hear your decision. There were plenty of people whispering that maybe, just maybe, Kevin Warsh would try and prove himself and say, I'm fighting inflation. I'm serious. I'm not tolerating. Remember, he said no tolerance for inflation. There was a camp here that thought he might hike. But the bets were no hike, right? What do you think?
Well, that's correct. There was a very major investment management firm
Zero
that
DTE
was
put
predicting
straight.
a rate hike.
Zero DTE put straight. Zero DTE put straight.
Fed funds futures market.
Zero
and
DTE
the
put
consensus view
Zero
of the
DTE
economist
put
was
straight.
no rate hike. What really
Five
gets to
o'clock.
be interesting
Long data.
is as we move forward. Let's look at this number late this morning. Fed funds futures was assigning an implied probability of about 80% to a rate hike at the next meeting to be held on September 16th. Moreover, the same futures contract was looking for a 92% chance of Fed funds being higher than its current
Microsoft into earnings higher.
There was a recent survey from Bloomberg where the consensus view of 80 economists was that the Fed's next move will not be to hike rates, but rather to cut rates, where the rate cut is not going to happen until the summer of 2027. So there's one divergence of opinion among experts on the market side and in terms of economic analysis, financial market analysis.
It's amazing here because we're expanding. We look at what's going on with economic activity, expanding at a solid pace despite elevated uncertainty due in part to the Middle East conflict. Were there any wild cards in your opinion? Because some of the things were comments and commentary we've had, like AI unlocks efficiency, productivity has been surging, and that's good for operational margins that have been followed.
Shenanigans.
So maybe things weren't as bad as they've seen. Were there any surprises here to you that you were watching or maybe expecting? I mean, we know that Warsh has now said they are committed to price stability.
Intel Pulse.
What I liked
Shenanigans.
about this report was the emphasis placed on the strong showing by business investment spending that includes spending on AI. My takeaway would be that the Fed is less concerned about the inflationary implications of strong business
versus investment spending as opposed to strong consumer spending. And right now, we do not have strong consumer spending. We have middling spending. We have spending that is proceeding at an underlying rate of about 2%. And my sense is that 2% real consumer spending growth is not going to bring about an unwanted upturn by inflation, but rather 2% real consumer spending growth will be supportive of a renewed decline by core inflation once we reopen the straighter formulas convincingly.
Microsoft continues to rise into earnings.
Q's punch, long dated. Q's punch, long dated. Long bond punch. Nvidia pulse, long dated. Deep call. Q's punch, long dated. Apple pulse, long dated.
In order to take that, because that high oil price then causes all kinds of issues.
Apple pulse, long dated.
Shippers, airlines, that we know. It's
Palantir, Microsoft looking good here. Microsoft going.
It's great to see you, John Lonsky. I mean, it's been steepening. I saw some of the headlines. The dollar fell off a bit. The 2-year yield.
Q's pulse,
You know,
long
that
dated.
also fell a bit.
Apple pulse,
So we'll keep an
long
eye on
dated.
all the emerging markets. Currency index hit a high. A lot of little things have been happening since 2 p.m., John Lonsky, and I'm so thankful you were with us to break it all down. Thank you, John Lonsky.
Thank you for the
The Lonsky Group. Good to see you, John. Coming up next, even more reaction to the Fed rate decision, because at 2:30 we'll hear from our Fed chair, Kevin Warsh. This will be his second meeting as our Fed chief, and the first one was described as short, shallow. Will he go a little more in depth this round? Well, now stocks have taken a turn to the downside. The Dow's now down 725. The S&P's been somewhat steady though at 74.03. The 10-year bond yield at 464. We'll be right back. Just a quick break.
Apple pulse, long dated. Tesla, Shenanigans.
Bet on this and win. You bet on this and lose. This and lose. This and win. This and lose. This and lose. This, lose, lose, win. Lose and lose, win. Even this, lose.
Tesla pulse,
Isn't investing.
Shenanigans.
Investing is owning. It often rewards patience and discipline over shots in the dark.
All right, Microsoft just came back in there. A little pop and a drop.
Tesla pulse, Shenanigans.
Palantir driving up.
Macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Zero DTE put strip.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk. Our team of
Zero
traders ready to
DTE
tackle your
put
trading
strip.
questions.
Size. Zero DTE call strip. Standard
Plus,
support.
get 24/7
Shenanigans.
that's support by phone, email, and fax.
Hey, Bob. Hey.
Zero DTE put strip.
Market's looking good. Market's looking good. Looking for the bounce.
Because wages won't go up. But the real problem is, once you have a bout of supply side inflation, the only way you bring everything back to equilibrium is actually allow the wages of lower people workers to go up. That's not going to happen. Less. It's just that your wages are going to go up there. But that's a fact. If that ultimately translates to get back to an economy which feels like it's working for most people.
Although we all still feel frustrated to pay $20 for a hamburger. Right. We don't complain like we should. I think people realize it's not coming back down. They realize
Zero DTE put strip. Start. Zero DTE put strip.
New York Bangs are hanging out. They're doing okay. Just off the highs. There goes Google. Google pushing a bit higher now. Google. Google.
Canadian dollars. Brent, what you comment after the break? Rick Sandelli, Steve Leishman, thank you both very much.
Google looking for a follow through. All right, watching Google at the highs here. S&P initially popped. We're waiting for Warsh news conference at 2:30.
Spider puts. AMD puts. Long dated. Deep puts. Spider puts. Triple semi puts.
S&P is still fading a bit. Microsoft hit the highs. A little bit of profit taking there on Microsoft. Apple, Amazon, Google, Meta. These are all looking pretty good for the most part. Broadcom. Okay, Netflix. Hanging out at the highs, Netflix. Stocks on the NASDAQ 100. GE Healthcare, number one. Pulling back. Intuit, INTU, Intuit. At the highs, Intuit Financial Software and Support Services. Datadog.
Q's pulse.
Looks good. Workday. At the highs. Adobe. Just off the highs. Seagate Technologies earnings. Nice push. ADP. Diamondback Energy. Diamondback Energy, big pop here on Diamondback.
To our special coverage of the Fed's decision on rates, which they just issued 20 minutes ago.
Fuse pump.
Let's check the markets. That's what we'll see a little bit bigger reaction.
Fuse pump.
Now it's back to where we started. It's actually down to 812 points. Right now, it's pretty much back to session lows. The 10-year, the 2-year, call it kind of unchanged on the day. We have so many people stand by waiting for here from Walsh himself. In fact, I'll probably get one from him, but we'll see. David Kelly of JP Morgan Asset Management, Jim Karen of Morgan Stanley Investment Management,
Micron pump. Long data.
Markets. We have a senior economic report, Matt Peterson. Jay Woods is here. He's the chief market strategist at Freedom Capital Markets and CIO.
Shows up.
Theo.
Actually, nothing. I was not expecting a hike, and I thought they'd be 2 to 3 descents with uncertainty about Kashkari. So it all comes down to the pressure.
So why, Peter, why aren't the markets, why are they reacting the way they are? Which is either you could read this as they're still in a bad mood today, or there was no reaction to the somewhat dovish surprise.
Nvidia pump.
There's so many
Long
interesting
data.
cards here. Coming into this meeting,
Netflix.
collapsed to the point where the 2-year and the 5-year break-evens are well below where they were entering the first weekend of March when the conflict began. Kevin Warsh has been sitting as the stand dropping for many years. He looks at the tips market versus stable. So putting that aside, the bond market's already tightened. The 2-year yield, the 10-year yield are up about 20 basis points since the June meeting. So I understand there's a lot of angst about whether the Fed was going to hike or not, but the bond market's already done it.
Yeah, that was the point, Francis, that we made to Rick Santelli. Listen, tips, treasury, inflation, protected securities. So one or two things that you watch most of the
Well, you mentioned when it tried Canadian heritage, and one of the things we're watching is not just how the Fed has responded to this environment, but how the global central banks are responding. Because it's not just the Federal Reserve that is
Micron
dealing with the
pumps.
environment that is
Long
supply
data.
shocks, it's
Shenanigans.
it's much more recent. Seeing this challenge, it's calling into question what is the monetary policy in this new economy. This is not being given Fed, it's not being given the economy. Same things for Powell said not being the Powell economy. What's happening here is a shift away from monetary policy towards fiscal policy being the main tool. What that means is there's more so long into the curve that's going to be so much more telling about the future of policy, not just for fiscal, but monetary as well.
Jay, how are you reading this?
Well, officially the first reaction.
Flat, and despite the all of a sudden that big inflationary concern right back at us. So I want to hear his tones for inflation. It's that press conference. He should be pushed. Let's see how long he talks about Fed and how he closes. But you can hear him talk about inflation, even if that means the market sells off even more. Respond back. Test 7,000 or 7,500 at the time.
Long data.
75% chance of a hike at the September meeting. So the concerns are there, and it just accelerating again with this spike in oil, and the volatility there is something he's going to have to address because given the fact that some of these semis
Netflix trying to push a bit higher. Netflix.
This is going to be really important. As Kevin Walsh has said, this is how we measure the Fed's credibility. If we see the 10-year someone can back to 2025 said that the Powell Fed had failed after the cut rates in September
fall of 2024, still kind of on. I mean, even if they raised rates 75 basis points, 3%, but they've just been taking it back to where they were prior to those rate hikes. So cuts rather 2024, which by the way, a lot of people might say, still don't fully understand. That's the way I think it's going to challenge me because cuts coming.
S&P fading a bit more.
Long dated.
Warsh will be speaking here shortly.
He doesn't really want to talk about the sense. He doesn't want to give any forward guidance. So the fewer questions he answers, the better he's going to feel. So I will make bet that this is the shortest we've seen in years. And what I'm listening for in the press conference is how many times he says the words task force. Because the reality is that we don't know what inflation metric. We're talking about inflation. We don't know what metric he's looking at. Is it a trip mean? Is it true inflation? Is it some other time series? Exactly what that is. And that's what task force is determined. So I think whenever he gets a hard question on this, it's about what's your inflation exposure, about inflation stability, task force. I think that's what's
Intel pulse. Shenanigans.
All right, Netflix is trying to break out.
Behind the dinner meeting, although I did find it amusing, is to pay attention to the data. We have a list of calciums on all of these things. There's probably 30 terms on there with task force.
Netflix trying to break out.
Central bank productivity, AI, balance sheet uncertainty, oil. I mean, that's where people go highest. Things like that. So
TFN has been resumed in less than a minute.
Hockey stick prices on second job recently decided that we would keep interest rates just a ton of
Malcolm Pulse. Long dated. Deep core.
about interest rates, but they care about mortgage rates and interest rates. A lot of mortgage rates should just get used to this.
Malcolm Pulse. Long dated. Deep core.
TFN has been less than 10 seconds.
Long dated. AMD pulse. Long dated.
My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak.
Soft pulse.
but our
Long
discussions
dated.
again were collegial and
AMD pulse. Long
I'm
dated.
truly lucky to work
Deep
with
core.
colleagues so capable and mission focused, and so determined, like I am, to sharpen the performance of the Federalist. Today, as you
S&P turning back up. Microsoft moving higher.
to maintain the target range for the federal funds rate at 3.5% to
continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement
Low
conveys
tick.
just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We've begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy.
Netflix.
2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee. But for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal. And where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment.
Microsoft still looking good. Microsoft.
Does not necessarily make the Fed's role any easier. In the AI-related category of
Going into earnings, Microsoft's hanging out near the highs.
The most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years. Strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic? Or do we just focus
Netflix about to go
because
again.
they are under the bright streetlight?
Netflix
Finally, we discussed
breaking higher.
monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is
Netflix
advancing
is
at the Fed.
moving.
We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own. Let's turn to them now.
There goes the S&P.
Long dated. Apple poll. Long dated.
Thank you for taking our question, Mr. Chairman. You've had a couple months now, or 9 weeks, whatever number it is, to see the markets behave in the absence of
Here we go. S&P's on the move. All right, looking good.
what message are you getting from the markets as to where policy ought to be right now?
I think officially it's 8 weeks and 4 days.
S&P turning back up.
I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasury or the foreign exchange value of the dollar, and trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. It's part of the reason why we've been so spare in our words. We've pulled back from forward guidance. So they're reacting to events, I would say, much directly over the 42 days since we last met. This is a good thing. I mentioned in the prepared remarks, we've
S&P turning up. S&P.
but in real rates too. And we're observing it. We're trying to stay out of that because, you know, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate would go.
So, I'm sorry, it's your question. So, interpreting markets is an imperfect business. We central bankers, like market pros, and think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well.
S&P's going.
Disaggregate the treasury market signals. I wouldn't be able to do it perfectly, but the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Sandisk pulse. Long dated. 0 DTE. Put
Jones Financial Times.
Intel
We've
Pulse.
got the family
Long
fight
dated.
euro after this.
Shenanigans.
We saw,
0
we saw
DTE.
we saw 3%.
Size.
Could
0
you
DTE.
characterize the
All right, I'm going to take some of these calls off from earlier.
tell us a little bit why you
Long
were
dated.
persuaded by that?
Shenanigans.
Thank you.
0
I guess I shouldn't give you their
DTE.
best
Put
options. I'll give you some others.
Google poll. Long
So
dated.
you were right. I
Deep
asked for a
call.
good family fight. I got
AMD
one.
poll.
That's the
Long
purpose.
dated.
That's the design
Push.
feature.
0
I
DTE.
come into
Constant.
this meeting,
0
even this
DTE.
press
Constant.
conference,
Size.
heartened by what I've
Intel
experienced
Pulse.
the last 2 days.
Long dated.
Most of our discussion
Shenanigans.
were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them.
0
There
DTE.
was a lot more
Put
interaction between and among
Size.
my colleagues. It was a real family fight.
0
My
DTE.
view,
Put
which you've long heard,
Size.
is that's the better way to get policy. That's our North Star. So
0
there was a
DTE.
lot of agreement that I heard.
Size.
That we have the powers, the tools, also the authority to deliver stable
Amazon
prices. No
Pulse.
walking back from our
Long dated.
responsibilities.
Holy cow.
There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing
Amazon
inertial about that discussion.
Holy cow.
It was an
SPX
active,
poll.
robust discussion about
0
what's in the
DTE.
full range
Pulse.
of what we
Size.
can do and might want to do in the period ahead. You characterized accurately, there was a
Amazon
disagreement
Pulse.
about a decision today. I would say that doesn't sort of capture the full essence of the discussion.
0
The
DTE.
path to central
Call.
bank heaven
Size.
requires delivering on our
Amazon
agreement.
Pulse.
These days, that means
0
delivering on price
DTE.
stability.
Put strip.
I
Size.
would measure that not
0
in 42 days
DTE.
or any
Put
one
strip.
particular
Size.
meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
0 DTE.
How much do you
Pulse.
think not going in July was down to the cool CPI print?
So in 2 words, not much, not much.
Holy cow.
I'd like to believe that the committee shares my view,
0
which
DTE.
is
Call.
the historic
Size.
problem with data dependence is the data and the dependence.
All right, these are going for 32 now.
Any
Holy cow.
individual piece of data
SPX
as
poll.
cover or as
Standard
excuse
poll.
or as validation.
Shenanigans.
What I care about and what I think the committee cares about is
0
the trends on the
DTE.
data.
Call strip.
Um,
Size.
Sure, we got some
33,
encouraging
34,
inflation
some of
data.
these are going.
I think at the meeting 42 days ago, I said something like 63 months of inflation above target.
Okay, NVIDIA's on the move now.
The final calculation might be a close.
Okay,
So
looks
we'll be
good.
watching inflation data over the period ahead.
Hi,
But I also
Tiffany.
want you to leave
800.
the misimpression that we're sort of breathlessly waiting. I've called for a task force to revisit. both
High
the
tech alert.
private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks. But I wouldn't say we overly relied on any one piece of data, including that data, which surprised me.
NVIDIA's on the move.
Hi, Chairman Warsh. Thanks. Neil Irwin, Paxios. Thank you for taking the questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. Suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high.
All right, S&P continuation here.
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy.
We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision-making when we meet in 7 or 8 weeks.
How would you characterize the family fight in the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tight?
Well, I think, the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on
S&P, nice rally. Microsoft going too. Microsoft going.
Were there different leans on the answers? You bet there was.
Microsoft.
So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Hi, took a look.
Thank you, Kospi from the New York
High
Times.
tick alert.
You mentioned that looking at the Fed's policy tools is one element
NVIDIA running here. NVIDIA.
address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. I
SOXL.
wouldn't say it's in isolation.
Nice rally on
I
SOXL.
described in my remarks today, point that I made into the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is
Microsoft still going. Snowflake going. Broadcom. Google. Amazon. All pushing higher. Tesla pushing higher now. NVIDIA pushing. Looks pretty good.
And I think we've made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it. We're not blaming as another. And our policy tools, like you referenced, is the
SOXL.
equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks serious. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter.
Microsoft looking good. NVIDIA looking good. All the New York FANGs are doing well.
Their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months, we're going to refine that view and have a better judgment. And we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence, Fox Business. I guess I want to drill down maybe a little bit. What specifically
New York FANG
the argument then for
bouncing near support.
So I wouldn't characterize what we did as
New York
anything like
FANG.
false.
I would characterize what we did as
SOXL at the highs right now.
review of the economic situation. I would characterize what we did as a review of the big hard questions. And I characterize it as a view of what our own homework is, to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say
Microsoft looking good. Microsoft
the other side of that. Financial
at the
market
highs here.
prices
Microsoft.
period. They didn't pause. They reacted to inflation data in one direction, strong economic growth in the other direction, and nominal real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story. And if I could, I just want to ask, not for guidance, but looking forward. Traditionally, a Federal Reserve Chairman uses the Jackson Hole Summit as sort of a reset of monetary policy. But how do you look at the speech that you're going to make? I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed, the more recent periods, it would be sort of a setting up speech more often of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the Pine Mountain Air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences,
Microsoft looking good.
the myopic. Did you do this by a
Tesla on the move. Tesla.
ultimately whether we deliver on price stability, matters to
S&P still going.
make in 6 or 7 or 8 week periods. They matter more. What are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a
49.
big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole. So I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them.
Those S&Ps 7400s are going for $49 now.
Think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not form anything I have to say in Jackson.
SanDisk Pulse, Intel Pulse, long data, Micron Shenanigans.
Nick Tamaros, the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. Chairman thought that can show up in the labor market. If that's not the channel,
Tesla's still going.
what is?
So let me go back to first principles, Nick. I don't believe that either
Google.
mandate is generally at war with the other part.
Zero
I do
DT.
not believe that price stability and full employment is a either-or proposition. There have been policymakers over the last several generations who felt that there is a strict trade-off there. It isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable, such that employers, businesses wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated. And that's what's taken most of our discussion. In terms of transmission mechanisms and monetary policy, I think
There goes Tesla. Tesla going.
interest rates, lending channels and credit channels, maybe conference channels and foreign exchange. Balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine tuning business. We're trying to get supply and demand in broad order. But really what we're doing as we sit here today at this press conference, I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business capital around AI, it's making that calculation a little harder to judge, but in the period ahead.
Zero DTE. Colton.
Where exactly was the disagreement today? Was it about the inflation forecast? Or was it something more about the risks than the tactics?
Yeah, so I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement.
Zero
Objectives
DTE.
and authority and
Zero
commitment.
DTE.
I didn't hear anybody walking away from it.
Long dated.
The judgments as to how best to achieve the price stability was probably the question that we were trying to answer. What's the best move? What's the best?
Google, nice follow through.
What's the best way to?
21 day is next at about 346. Google.
Zero DTE. Colton. Zero DTE. Colton.
Like I said to one of your
Zero
colleagues,
DTE.
I was
Zero
comforted
DTE.
that markets in the intermediate period
Zero DTE.
weren't reacting to us, they were reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves, how restrictive the treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Micron pulse. Long dated. Shenanigans.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to price the markets if they were pricing in something with higher certainty that was opposite of what
Zero DTE.
what are the risks that you see associated with that?
Yes, so it's a good question.
Zero DTE.
Surprise is not the objective. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon feeding markets, by not previewing our decisions, by not sort of giving nudges and leans. My colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own judgment. And so surprises are not the objective, but at the same time, I would say we didn't come into this feeling constrained by the full range of alternatives we had.
So some of your peers have continued to discuss how they think about policy decisions, and if you offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So I'm not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast. They don't want your dot. We just want your reaction function. Part of me hears what we really want is your forecast. What we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where
Apple pulling back in now. All right, profit taking starting to come in.
any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate, You see
Nvidia
underlying inflation.
Profits taking starting.
Crisis.
Spider
We're in crisis
Stop.
mode. We were
Apple
purposefully
long
providing
data.
a lot of
Zero
information,
DT.
trying to provide a lot of assurance, trying to tell people exactly what we're going to do. Offering forward guidance with clarity as if we're tying our own hands behind our back. We're in crisis mode. That strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all that information. So I
Zero
take seriously
DTE.
that the pullback of
Zero
forward guidance
DTE.
requires some transition.
Stop.
Reform isn't easy, but our general judgment is going to help us make better decisions and in so doing satisfy.
Shenanigans.
SNDU. SKHL.
Thank you.
Intel Pulse.
When you talk about the
Shenanigans.
2% inflation target, what measure are you
Intel
relying
Pulse. Shenanigans.
So I'll give two
Zero
answers.
DTE.
First, let me give
Pulse.
the proper
Stop.
standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a
Amazon.
measure of PCE
Zero
inflation
DTE.
as
Pulse.
the objective.
Zero
function.
DTE. Put
Um,
strip.
I
Stop.
have enough of my own, so that's our number. We're sticking with it. Who knows, come after next January, what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives.
Zero DTE.
Broadly, if you said to me, standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more. But to achieve that, I'm looking at a broader set of
Tesla,
inflation
nice
data than PCE.
at the high of the day.
So without
Zero
sort of
DTE.
fully revealing my cards, I'm trying to
Zero
understand, like my
DTE. Put
colleagues,
strip.
what's the
Stop.
underlying
Please
generalized change in prices that are happening in the economy? It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project.
Low tick alert.
To look and see whether we can't separate the noise from
Zero
the signal.
DTE. Pulse strip.
And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Zero DTE. Pulse. Stop.
Michael
Zero
McKee from Bloomberg
DTE.
Radio and Television.
Stop.
Low tick alert.
I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. You've said over and over again that
Zero
your job is to
DTE.
bring
Put
down
strip.
prices, to
Zero
keep prices
DTE.
stable, to hit
Pulse.
your target, and that
Zero
you will hit your target.
DTE. Put strip.
The market
Stop.
says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the
Zero
American
DTE.
people might be asking is,
Stop.
what are you waiting for?
So believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy,
Zero
evaluating our
Pulse.
tools,
Stop.
thinking
Zero
hard about the
DTE.
sources of data
Stop.
that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly.
All right, coming back in now.
So the
Stock's pulling back in.
discussion we
Zero
had in
DTE.
that room.
Pulse.
was
Zero
the farthest thing from
DTE.
inertia I can imagine.
Stop.
As a point estimate at this very moment, in a choice between two alternatives, you've heard the results of it, but I will tell you that this discussion was far.
SK Hynix, high of the day.
How best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, I won't let you, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate.
SK Hynix trying to break out.
It's not just about what we do. We're in the performance business. And so
SK Hynix trying to break out.
the treasury curve. If I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will.
High of the day
I
right
don't
there.
wanna leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks, but we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation. How can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
So I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you.
All the New York FANGs pulling back in a little bit.
The decision makers.
Some profit taking hit the markets just now.
Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be formed by, but not determined by these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee. So they too can have a family. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people, and full disclosure,
All the New York FANGs are turning back down now.
for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
0 DTE put strip.
Hi, Anne Sophia with Reuters. Nice to see you again. So I need a little help here too. You said repeatedly you have no tolerance for inflation. And yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation.
Okay, you're annoying. You're annoying.
Recovery time of 7 days.
They're all saying the same thing.
That being said, we still did see a gap in net loss. They lost approximately 1.3 billion during the quarter. That's significant. Results do include roughly 4.2 billion of special charges, including a $3.6 billion write-down tied to their Blue Oval SK battery venture and roughly 500 million related to those canceled EV programs. And this, I'm shocked, does not provide more of a headwind to what was otherwise pretty banner numbers. Revenue also dropped year over year, total revenue falling 4%. And their vehicle volumes did remain fairly pressured. We saw production and sales both impacted by aluminum supply issues tied to Novelis's supplier disruption. And so The EV business still deeply unprofitable. Street doesn't seem to care though. And I mean, again, their EV strategy reset is still ongoing. We're seeing that play out, but perhaps this was priced in because it's I think it's a concern, but obviously seems well understood by markets at this point.
I think there's a lot of optimism too around this Ford energy on their stranded energy assets as they move away from this EV business. That is a potential adjacent growth story for the company. I saw it mentioned in several notes that I read today. And also, you mentioned the aluminum issues, but I think they were sort of really highlighting them more almost as a
Microsoft, Meta earnings tonight. Microsoft and Meta earnings are tonight.
Sooner than had been expected, which is also probably leading to some of this strength today.
But we are seeing a really nice move in Ford, and I looked across to GM, had a nice response as well, although mostly flat in trading since its earnings. Their upgrades at Ford to their outlook, their improved outlook actually comes in just slightly superior to GM's improved outlook if you break it down to the midpoint for each of their raises. So I thought that was interesting as well, since we usually hold them side by side.
SK Hynix moving higher.
Earnings did not help.
Yes, and this is a great, I think, signal of again, some of the reset that we're seeing in the month of July so far. Obviously, earnings not necessarily acting as any cushion to the flow, but it does then set a stage, I would say, especially as we approach other earnings reports later this evening. I mean, I mentioned ARM as well as Lam Research, but all of these names kind of compete in a very similar world. And so that's a going concern. When you look at the broad, based sort of I would say, analog type of companies right now, like Applied Materials, as well as ASML, KLA Corp only adding to this trend where these names are getting absolutely just punished post their earnings. Obviously, does not mean we could see the same from a name like Lam Research, but it does face a very critical test here. And I will say, KLA Corp, to their credit, this name right now, beat on both revenue and earnings. Fourth quarter revenue still beat expectations. They did see, records. We did see that revenue did reach an all-time high of roughly $3.66 billion. That was up 15% year over year, a 7% improvement sequentially. This was also driven by this very strong AI-related demand. Management continued to point to accelerating AI build-outs, particularly in their advanced process controls and leading-edge semiconductor manufacturing. Advanced packaging is becoming also a major growth driver. They expect their advanced packaging process control revenue to reach, 1.1 billion now by 2026. That will be a 70% year-over-year increase. Their service business also does remain strong, rising 17%. Also seeing, excellent profitability, gross margins coming in around 62.4%, operating margin at 43.7%. That's actually some of the highest we see in the broader semiconductor world. So what went wrong? The memory market does remain a concern. It seems like the difficult pricing environment, which was of note, could also continue to create some volatility in the space. Well, tariff headwinds also are persistent, noting that actually tariffs and related costs are continuing to pressure their margins. So a bit actually of the opposite story of what we just discussed with Ford. And China does remain a key risk to the entire fab equipment industry. Does seem like there's still a lot of focus on export controls, potential impact on future sales. And again, high expectations going into this print, but I would even argue that there weren't that high of expectations. There was much higher expectations about a month and a half ago that have now been reset.
Pretty whippy price action.
This reset knows no bounds. You could still drift lower, and drift is not even what I would put lower today. We're falling here today.
Yeah, KLA still down, even as we've seen the broader market try to reverse course here. KLA still down 6.5% for KLA Corp. But let's close on one that's gained on the session. I think expectations were for the numbers to be good for Bloom Energy. Good doesn't even cut it when your earnings are up 680%.
No, and it's ridiculous. You have, for example, so their revenue up 166% year over year, crushing expectations, not even close. This was their first $1 billion quarter, which is also of note too. A pretty major milestone for the company. Management did say they've become really a leading provider now of on-set power solutions for these data centers, benefiting from power constraints that are still facing hyperscalers. Margins also expanded significantly, rising more than 600 basis points for gross margins year over year. And also they lifted their full year revenue guidance, implying roughly 100% annual growth at the midpoint, which is obviously not a bad place to be. So they do still have a heavy dependence on AI infrastructure spending. I feel like a broken record, but that is, of course, of note for a risk here. And a key concern remains whether today's AI power demand represents a more durable multi-year growth trend or a temporary investment cycle. That's where it seems like there's been some risk to some of these power plays into AI. Also, after a huge run, it does seem like there increasingly needs to be further catalysts to justify this level of upside, but large AI and hyperscaler customers are accounting for an increasing share of that demand. So there's volatility there. But I mean, I think that you look no further than like the direct beneficiaries of increased CapEx, which has been, of course, the going concern. If you're a hyperscaler, it benefits a company like Bloom Energy pretty directly. And so seeing that play out in these numbers, which have wobbled around firmly higher now as we close out the trading day.
And as we talk about how good these numbers are and how they've wobbled a bit, but they've been firmly higher, they're up about 3%. But in the session before they reported, they were down more than 11%. So we haven't even retraced the losses from the previous session, even on triple-digit growth across the top and the bottom line.
Even this thing has pulled back. I mean, like, we're still up like an exponential amount this year while remaining off of highs. But I mean, like, we're well into technically bear territory while also having a phenomenal year to show how volatile the stock is.
Certainly is. Jenny, really appreciate you breaking it all down for us. That's Jenny Horn, co-host of Next Gen Investing. Coming up, we are going to dive into the Fed's rate announcement today, what Kevin Warsh said in his second press conference as Fed chair after the FOMC left its benchmark rate unchanged. That's all next on Market on Close.
Schwab Bank Investment Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Zero DT.
Mom, why did my grandparents move here? Did they know what a family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Zero DT. Zero DT. Zero DT.
Welcome back to Market Look. I'm Mark Hayden. To discuss today's FOMC rate decision, let's welcome in our next guest, Thomas Urano, co-CIO and managing partner over at Sage Advisory. Thomas, great to have you on here. How are you looking at the decision that we just got? I mean, there was a roughly 1/3 thought that we might get a hike, but the majority was thinking it would be a hold. It turns out it was a hold. What are some of your takeaways, and did it match your expectations?
Zero.
Yeah, I think the meeting today delivered on expectations, number one, but I also think there's some pretty interesting takeaways. The decision, number one, a 9-3 decision shows that the committee acted with a majority, but there is still some dissent. I don't think that dissent is a bad thing. I think that dissent shows that this family fight that Warsh was looking for shows that the committee is recognizing inflation risk is real, and there's still some struggle on how they address it. But as a majority, they can come to a decision. So I think functioning of the FOMC is sound. I think the market would have had a more challenging outcome if it was a 5-4 decision. So the split decision, I think, was the appropriate thing. The other interesting thing, I believe, in the conversation following the press conference, there was, I think, a quite brilliant explanation, and you had to read kind of between the lines, so to speak, to understand the benefits of this reduced forward guidance, which I'm not sure we fully appreciated, but I think Morse is doing a good job of really clarifying what reduced forward guidance is and why it's benefiting the market. And the last thing I think is this AI CapEx recognition of the magnitude of AI CapEx and the impact it's having on inflation pressure, pricing, and price expectations in the future is also one of the takeaways I think that the market is digesting. The market's certainly recognized it, but to hear the Fed chair mention it, I think is something that the market says, okay, this is something we have to think about.
Yeah, I thought that was also really interesting. Him talking about the lack of forward guidance and what it was showing the markets. He phrased it, saying the market participants are learning to play the call, not the referee. This is a change for the better, and he expanded a bit there as well. But it was very interesting conversations in the lead up to it. I had several guests imply to me, or even directly say, that they thought this would be a part of that sort of teaching moment, forcing the market to actually participate as opposed to predetermining what the decision would be, and that they thought there would in fact be a hike to sort of force them to go with the shock factor. Was there any point where you thought that was a possibility?
Well, yeah. I mean, that was certainly a possibility. I mean, there were many arguments saying that a surprise hike today would have really reinforced the Fed's credibility as an inflation fighter, versus credibility as an inflation fighter. But I think in reality, this idea of reduced forward guidance, but this very strong emphasis on inflation fighting, recognition of inflation as an actual risk, it really has this kind of game theory element, so to speak, of driving the market to do the Fed's job for them, right? And I think during the press conference, he listened. He specifically mentioned that one of the notable changes since the last meeting was that nominal and real yields are materially higher, i.e. rate hikes, similar to rate hikes, right? So the market is doing some of the Fed's job for them. I think in the previous 2 decades where we've been accustomed to forward guidance, the market would simply look and say, we're going to put rates wherever the Fed says the policy rate is going to go. And that doesn't allow, or it doesn't, I'll say, enlist the capital markets to price risk premiums based on their outlook. It enlists the market to price risk premiums based on where they think their policy is going. So effectively, I think this reduced forward guidance says, hey, let's force market participants to internalize inflation risk and adjust behaviors. And in that case, financial conditions can tighten without the Fed having to actually move rates. And that can influence inflation expectations and economic activity through market behavior rather than solely relying on Fed funds rate. So I think the brilliance of all of this is, yes, he can use his pulpit, he can use his stance on inflation to kind of guide where the market should go. He can reduce forward guidance to say, hey, market, you guys have to do some of the heavy lifting too. And then we can get to a place where there's multiple tools at play to help fight inflation.
And as far as the dissents, I mean, I know you were in the same camp as many people that I talked to, that the number of dissents was going to be more important than the actual decision itself today. And of course, that's the focus for everyone with rates unchanged. But as far as who they were, I think Logan was expected, Hammock was expected, Kashkari was sort of on the fence here. Christopher Waller expressed some concerns over time about inflation. Were you surprised by the number or the participants that were pro-hike? Were you expecting it to be greater? I know you said if it had been 5-4, it would have been a very different setup here.
Yeah, I think that would have been a different outcome. If we had had a much larger Yeah, so that's a great question, and I think that's the reason why this idea of rise in employment is coming into part of the issue, right? It's like
S&P back down to 73.75.
and that's an issue, I think, in having that conversation, the FOMC can recognize that it's the right policy move today to raise the policy rate, whereas the right policy move today to acknowledge that we're seeing inflation pressure, it's still too high. We're gonna continue to investigate issues and drivers and respond accordingly. Meanwhile, let's enlist capital markets to aid in that debate. And again, saying that interest rates are materially higher than they were at the previous meeting, that's equivalent to rate hikes. That's employing the market to help them eliminate inflation pressure. This policy affects supply shocks. I think, consensus is that no, right? But can a broader suite of tools, meaning bringing in the private sector and pricing of risk premiums, curve slope and level of rates along with the policy of the Fed, can all of that come together to help it? Perhaps.
Taking a look over at the big board while you were talking there, just
All right, everything turning back down.
and we've seen a complete reverse course. And we're 90 minutes out now from the decision. We're about an hour out from the start of the press conference. We flipped 50-50. We had S&P and the NASDAQ both at the green. Now they're firmly back down in the red, both down about 0.75%. What do you think the driver was to move us to the upside and then pull us back in a short amount of time when in theory we didn't really learn anything unexpected?
Yeah, true, we didn't. So where were we pre-Fed? We were down a bit, right? Markets were in the red. I would argue
Everything's back down.
risk that was being taken off the market today was related to AI CapEx, profitability in the AI space, the tech space, and that's been the big driver for the last 6-8 weeks. And then, at some point, this idea of a supply chain today put a little bit more pressure on it. Like didn't happen. A little bit of a very short-term relief rally, but right back to where we were yesterday, which is, hey, it's all of this CapEx spend going to generate enough revenue to sustain these 4P.
Oh, these people just on and on and on and on, the same shit over and over and over. God, it's annoying.
The mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make.
So this idea that they have decisions to make, Scott, in the intervening period and by the next meeting.
We're down 60 handles on the S&P futures. Just like that.
But there's a lot of talk out there, Scott, about the way the chairman talks and whether he's both consistent and telling us very much in a way that's useful to markets to do what Jeffrey does, which is to try to figure out the buy or sell bonds at which part of the curve.
I would just go back, Steve, to the idea that, look, I think you could have a bit of a different take and say that he is content, if not pleased, if not quite happy.
Okay, we have quite a few. 7,400, 99 percentile, 0 day. Was that there a few minutes ago? Okay, that's been fluctuating since the Fed rate decision, since 2 o'clock. Since 2 o'clock, they started selling. Since 2 o'clock, they started selling right here. Okay, you can see right there, it starts to grow, 7,400. Okay, that's resistance now, 7,400.
I would say that's an awfully bold statement for 42 days in office. When people spend years and write PhD theses on what moves bond markets and what's inside any particular change in a yield, I don't know that we would say that markets have dramatically changed. I think markets took a hint from what Fed Chair Warsh said at his testimony and what he said at the last press conference. They decided things were more hawkish than we believed, that it could be that the markets are reacting the same way they reacted before. And I wouldn't say that there's any been a dramatic change in how markets have changed. Yes, there was less reaction function, but there were many people out there talking. And you saw those three decisions right away. Could have been predicted by markets right, because they spoke and told us what they thought about interest rates. So, and by the way, calling back from Harvard Hawks, if you want to know, Scott, Kashkari, Logan from Dallas, Kashkari from Minneapolis, and Hammett from Cleveland. Those are Harvard Hawks who decided. And by the way, I think there may be more support for a rate hike in the coming weeks. We'll have to listen to what different people say. But I just don't think you don't want to say, oh, well, we've been here 42 days and markets have changed how they're reacting to things.
Yeah. Good stuff as always, Steve. I appreciate it very
All right,
much.
S&P moving a bit lower now.
Down in DC at the Fed. I'll come back to Jeffrey Gundlach. Now, I'm curious, Jeffrey, what you think is as to whether it's more difficult as a bond investor without the teacher's help in some respects, that the market is going to make its own judgment. It may end up being wrong, but it means that rates are going to move on what it perceives to be the Fed's upcoming policy rather than getting any guidance from it. What are the challenges for what you do for a
More
living?
low ticks.
It's clearly going to be a new world of information from the Fed.
Long date. 0 DT.
Well, I never really took much guidance.
S&P dropping pretty hard here, actually.
Judge that basically the Fed follows the market. It's not so much the market follows the Fed. You have to go back to Volcker for the market to be following the Fed, or maybe even a little bit green space.
Extreme low tick alert.
But what's happening in the market is that the first press conference that he gave, the yield curve flattened a lot, and the market gave him a lot of credibility. He really came in hard on the idea that there's going to be a concerted effort to bring inflation down. The market kind of believed him by having a big flattening of the yield curve to the 30s. And we've got the exact opposite today. It's almost the exact opposite in direction, but certainly shape of what the prior press conference was. So whatever capital he got, intellectual justification or belief from the market, he unwound it today. I mean, just by the verdict of the market, the steep thing today is about the same as the flattening was at the prior press conference. I still believe that long-term interest rates are headed higher, and they're headed higher, particularly if the Fed raises interest rates. So we know that we have a budget deficit problem, the Social Security system scheme by 2032, and they're always optimistic. So they're going to run out of money by 2029 at the latest, in my perception. And we have the budget deficit that is starting to.
Okay, VIX. VIX back up.
And interest rates just keep rising because they don't believe that this problem is getting under control. Congress obviously isn't doing anything. The president isn't doing anything to rein in spending. So,
All right, the VIX.
how are we going to finance all of this debt? And what we're going to do about Social Security, and this is not our grandchildren's problem. It's not our children's problem. It's a problem in the next 5 years at the absolute most. And interest rates are going to keep rising unless there is action on the deficit and some movement towards a real decline in the inflation rate. And that means rates will probably go up. And I do believe, at our last visit, I said I didn't think they would raise rates.
All right, what's CBRS doing? Cerebras, CBRS. Back down. SpaceX. Okay. Markets experience some drawdown at the moment.
In September, particularly if the yield curve keeps steepening. The problem doesn't make a spring, so we don't know if this is just a one.
New York Fang. Okay, looked a lot better earlier. We had a bullish candle, now we got a bearish candle.
Obviously, getting back to your question, everybody that's good at bond investing, and I've spoken to all one-on-one conversations, they all say the same thing. The hardest thing about bond investing is you got to watch every tick. You got to watch all these cross markets, all this stuff. And one thing that didn't come up today is what's going on in the credit market. The market for corporate credit is definitely softening. not so much in the investment grade area, not in every sector, but there's been great movements wider in spreads for a lot of these AI names and other technology names.
Holy
The
cow.
CDS on a lot of these hyperscalers, they
Holy
haven't
cow.
blown out. That would be an exaggeration, but they have
Zero
moved
DT.
quite mightily in the past month alone, just here in the month of July. And so I think investors have to be really seriously thinking about what is the credit risk, what is the default risk in the triple C of the jump bond market, bank loan market, because triple C bank loans.
Wow, I can't believe the change in the S&P.
And that's usually a sign that
Wow.
something is going wrong. And we also see
We're up at 39, 49. We're at 49. I think the top in the 7400s were 49.
Ratings are coming for these new bonds and triple B minus, and in short order, the bonds are trading.
They're down to 60 cents now. Wow. That's crazy. And the puts went down to 40, or up to 40, 50 at the point, at this point now. More low ticks.
Market where ratings are being relied upon by a lot of companies, insurance companies in particular, so they get better capital treatment that they deserve to get, because
Zero
shop
DT.
rating agencies, there's now 7 or 8 rating agencies, and there's some suspicious activity going on.
Zero
That's one of the
DT.
reasons that's one of the
S&P continues to move lower.
sniffing out. Got to pay attention to.
Okay, Apple, everything rolling over.
Zero DT.
I'm not sure if you're able to see in real time that the 30-year tops 520 for the first time since 2007. So the long end, as you're talking about it, maybe some of the reasons why you are talking about it, is moving higher. The stock market obviously doesn't like that. Dow's down by nearly 1,100 points now. Whatever feeling part of the stock market was had after Chair Bush finished speaking has evaporated because it's negative again across the board. There's your real-time Dow picture. So I wanted to make sure you saw that on speak, because you were just mentioning, the graded bond investors you are in that group, obviously, watch tick by tick by tick. Well, the tick by tick by tick is telling a story of its own right now, Jeffrey.
Zero DT.
Yes, I didn't know that the market had taken a break down, but I'm not surprised the 30 years
Zero
above
DT.
518. I put it out on X a couple of weeks ago to keep bumping into 518, and we just can't seem to hold it.
S&P continues to move lower.
Getting more and more like we're going to crack above it. And I think we're starting another leg up in 30-year treasury rates right now. We've had a debate at our strategy meeting just yesterday that went on for quite a long time as to why isn't the yield curve steepening. And I think it was because of the fact that the chairman in his prior press conference was so adamant about 2%. But I don't think the market believes that.
Zero
Wants
DT.
to.
Long days.
So long rates
Stock.
could very well be moving up into the fives by the next press conference.
Wow. It sounds like you obviously suggested that you don't like the long end. You would buy the 30-year here. I thought it was interesting that JP Diamond told my friend Wilfred Frost on his Master Investor podcast earlier that he would touch the long end at these prices for the very same reasons that you suggest you won't, because of the problem with the debt that doesn't seem to be going away anytime soon.
Intel Pulse.
Yeah, it's problems with government debt,
Micron
debt, it's problems with Social Security, a brick wall,
Micron
and it's a huge problem with these monstrous deals in the AI category that are coming out. And I think it's a little bit what investors have to really start thinking about is what's going on here with passive investing and all these IPOs coming out. You had the SpaceX one, a couple of these Anthropic and OpenAI keep saying they want to do one of these things. So what they did is they sort of changed the rules for SpaceX. So that, they lock up periods less, and the index inclusion accelerated. It looks rather to me like passive investing is starting to be a dumping ground for all of these IPOs. In other words, you're getting the founders of these tech companies, they're getting an exit by basically putting it into the passive bid.
that has been so strong is passive money is down in the
Zero
equity greater
DTE
than
put strip.
active money.
Stocks.
Well, passive money is absolutely
Amazon
insensitive by definition to price. I mean, if SpaceX had come out not at 135 per share, but 135,000 per share, passive would have bought it anyway. In fact, they would have bought even more.
All right, so the 30-year yield is up. They're talking about the 30-year at the moment.
It's a trap right now. It's a momentum trap. You're tremendously overweight in these high flying names. And I recommended last time, and it's
The 30-year bond,
do equal weighted investing.
Holy
Do an
cow.
equal weighted version of the S&P.
30-year yield is
Zero DTE.
basis, and it's certainly
moving higher.
and I believe
Zero
strongly
DTE.
that will continue to be the case. So if you want to be passive, that's fine, but don't do it on a cap weighted basis. Do it on an
NHX
equal
may
weighted
resume in
basis
less than a minute.
so that you're not over your skis. You know, in the Korean market, which has been all over the map, as I said, there are two
RKLE.
stocks that are 50% of the market cap in Korea. So if you would do a cap weighted Korean
Zero
index fund
DTE.
investment, you're basically just
Stocks. Zero
crazy
DTE.
high flying
Stocks.
AI-related companies, Samsung,
Zero
and
DTE.
the other, they've been showing all kinds of volatility
Long
lately.
dated.
So that's where I am. I
Long
think the
dated.
yield curve is going to
Next
steepen,
up.
and
Long
I
dated.
think Morris is going to have to talk, not just talk next time. I think he's going to have to raise rates to claw back some of that credibility that he spent today that he had earned in the June press conference.
Wow. So if that in fact is your view
Holy cow.
and it comes to fruition,
NHX may
Zero
you must not like
DTE.
any part of the curve
Stocks.
now. What
Holy
is the
cow.
most attractive thing
SPX
to
calls.
you today? What
Q's
will you
pulse.
come into the
Long
office
dated.
tomorrow or even initiate before you leave tonight and say, look, this is clear to me that this is what I think is going to happen, so we need to do X. What's the X?
The X is what I've been talking about in past visits with
Zero
Scott.
DTE.
It's what I've been doing.
Zero
Stay away
DTE.
from the long end. Stay very high
NBIXY. Long
and
dated.
look at the 2-year to the 5-year to the 7-year, perhaps part of the yield curve.
RGTZ.
And you want to stay up in quality and no leverage. No leverage at this point in time. I think there's way too much leverage in the system because of all this private credit and insurance company tie-in, private equity tie-in. I could go on for 3 hours about that, but I think that the problems are starting to become visible in real time with
Holy cow.
DOJ investigations of funds that
Zero
funds down
DTE.
23% in the first half of
Stocks.
this year. There's something
Holy
wrong
cow.
going on in
SPX.
this category.
Zero
And
DTE.
that's also going to put
Stocks.
stress on forward tier credit. So I want to stay, triple B and higher, maybe some double B.
Meta tonight.
But stay out of the C category.
Google pulse. Long dated.
Where does the dollar go from here, do you think?
Zero
7%.
Well, the dollar went down based upon that press conference. I think there's more going on with the dollar.
TRC may
I think
represent
the war is
Shenanigans.
strong for the dollar. The dollar does well during wars the U.S. is involved in or that are global, really, at this point, regional at least. And so because of that. But I still think the dollar must go lower, looking out a few years. And so I continue to avoid dollar bullish trades. I'd also point out that with the war, with increasing strength of the dollar, going from about 98 to about 101 and a half or something, or something like that, I just think that we're going to have a declining dollar ultimately because of the deficit and what's now a kind of a delayed move by the Fed, which might be ameliorated in September. We'll have to see. But I do think ultimately the dollar is going down.
We'll visit in person, I believe, in September as well, which I'm looking very much forward to. I'll have you right here next to me at the stock exchange. It's going to be eventful, probably, huh?
Yeah, I bet it will be. It's a nice time of year in New York City, right there, early September. It's over fun.
All right, it'd be good to have you here. Thanks as always. I always enjoy these, and today there was so much to talk about outside of any moving rates, and that speaks volumes about what likely lies ahead for this Fed and the conversations that you and me have. Jeffrey, thank you.
All right. Thanks, Judge. Good luck out there, everybody. It's going to get interesting by your end.
All right, maybe well. We'll see you in person. Look forward to that, Jeffrey Gunlock.
Long dated.
We'll move right to the closing. I'll get Mike Pantoli here to break down these crucial moments of the trading day. We do Yes, remember, two mega earnings on
Micron
Meta
Fox,
and Microsoft
long
are in the
dated,
wings. We have
deep
full
call.
team coverage for you as well. Julia Borston's watching Meta. Kate Rooney is looking at Microsoft. Oliver Rennick is standing by live in Seattle in Chicago with the options activity in both of those names ahead of those prints. Plus, CNBC contributors, Hightower, Stephanie Ling, Big Technologies, Alex Kantrowitz, Capital Area Planning Group's Malcolm Etheridge. The entire team is at the table for what lies ahead. And Michael, I guess I'll first get your reaction to what this market is doing in the here and now. It clearly doesn't feel all that good about what it just got.
No, obviously
Low
there were
ticker
a
at
bunch of
minus
points in there in
800.
terms of the reaction, but
Zero
markets
DTE.
begin suggesting that inflation is
Zero
going to
DTE.
not be a trap like is driving
Zero
rate
DTE.
sensitivity through the equity market. Now you had this tentative attempt to bounce 2 days in a row in the semi, right when the long end starts to go higher in yield. It just knocked the knees right out from under that trade, and I think that's kind of really having a big impact on the headline index. Banks really dislike this. It is not the kind of yield curve opening that banks are going to like because it feels like financial conditions tightening at the long end. So, we always have to throw out there that sometimes there's a rethink of the first Fed reaction. Even the next day, we are going to get the big earnings out there. The equal-weighted S&P is down 0.5%, about half as much as the headline. But clearly, just a sense out there that you can jawbone inflation.
All right, we got about 11 minutes to go. We got Meta earnings and Microsoft tonight.
Holy cow. Zero
The
DTE.
tricky part, though, Mike, is what we alluded to with both Steve
Zero
Reisman and
DTE.
Jeffrey Gundlach is the market's going to have to put on its an extra large thinking cap from here forward. It's just going to get fewer and fewer leads from the Fed on what's likely to come, and that's going to be tricky for investors.
For sure. And, look, we're going to digest all the inflation numbers and all that. But so much of the discussion from Chairman Warsh about, supply side growth is good. It's going to lead to disinflation down the road. We shouldn't have a trade-off between economic growth and, full employment and tame inflation. That's all great. But nobody's saying we have to raise rates because the economy's good. People are saying we have to raise rates if we do because inflation's been above target. It seems like it might stay there. So I do think there's a little bit of a talking past one another on this. I don't think it's anything, that's going to be fatal. It's not something we can't adapt and navigate around. But at least for now, it feels like the market has
Zero DTE.
All right, good stuff, Mike. We'll see in a little bit, and we'll lean on you guys to make more sense of this in overtime. That's Mike Santoli. Just let me know. 1145 points is what the Dow more or less is down now. It's not what it used to be, obviously, given the size of the index now at 51,600. It's a 2% decline. The losses across the board really are about 1.25%, 1.25% for the other majors. So that's where we stand coming into some early earnings reports in overtime. Meta among them, Julie Borston, tell us more.
Big question is whether CEO Mark Zuckerberg further raises Meta's CapEx guide for the year after last quarter raising the range for this year by $20 billion to as much as $145 billion. Other key metrics to watch: revenue growth is projected to slow just under 27%. That's down from 33% revenue growth in the first quarter. And user growth is in focus after Meta's daily active users declined sequentially in the first quarter for the first time ever. With the stock down
All right, we'll continue to move lower. We're right down to this level here at 73.25.
The company to announce an AI cloud business. Scott?
All right, it's going to be interesting. We'll see what happens. Julia, thank you very much. Julia Borston. The Kate Rooney now, as we pivot to Microsoft, tell us more.
Scott, so it is another CapEx story for Microsoft, similar to Meta in that way. Investors are going to be watching three things for Microsoft. We've got Azure growth, AI revenue, and then CapEx, as I mentioned. So on cloud growth, 40% is the number to beat in the quarter. Investors also want some evidence that AI is helping accelerate cloud growth. Capacity and backlog are going to be key. We look at Azure on CapEx, $190 billion for the fiscal year was the last number Microsoft put out in terms of guidance. Watch to see if that changes, especially as there's been a lot more fatigue around some of the AI spending after Google raised its own spending outlook last week. Investors are growing a lot more sensitive to how much the tech giants are spending in this AI race. Investors also want to see AI show up elsewhere in the business. Watch Copilot attach rates as well. Finally, any sort of commentary from CEO Satya Nadella on that call. Microsoft been diversified away from OpenAI. Nadella has also leaded into this open source debate. talked a lot about trying to deliver AI at a much
Zero
lower
DTE.
As well, appreciate that.
Stop.
Much, Gabriel. Thank you.
Zero
Let's play some options
DTE.
action at the same.
Stop.
What do you see?
Zero DTE. Zero DTE.
All right, we're trying to bottom here.
Earnings, options pricing set in store for some big moves today. Check this out. Traders are expecting a 6% range in Microsoft and notably bigger than its average 4% earnings reaction. And Meta, they're almost 8% priced in right now, but it's had swings of 10% in both directions after earnings the past year. Microsoft has fallen after 3 of its last 4 reports, but here's the bullish part. Traders bought almost twice as many calls as puts in the stock today, and the same goes for Meta. In short, traders are positioned for rebounds in both, but if there's one to be on alert for, I'd suggest Meta, based on some unusual high-volume buying on 500 strike puts expiring Friday that only pay off if Meta crashes 14%. Scott?
Oliver, thank you very much. It's Oliver Rennick at the SIBO in Chicago. To our panel, I mentioned who's with us, Malcolm Etheridge, Stephanie Link, Alex Stankiewicz. Let's go big picture, AK first. The 2 worst hyperscalers year to date, Meta, Microsoft. The 2 hyperscalers that are most off of their all-time highs, Meta, Microsoft. What does that mean heading into what happens in just a few minutes?
Well, it's actually 2 different stories for Meta and Microsoft. Quickly on Meta, they're spending and they're spending a lot, but they don't really have a story to back that up. With the rest of the hyperscalers, many of them have a cloud business where even if they're spending a lot on building up AI data centers, they can then turn that around and sell it to others. Meta doesn't have that, at least as of yet. So it's been spending in pursuit of this personal super intelligence product that's yet to materialize. And that's why the market's treating it the way that it has, basically draining its free cash flow in the pursuit of question mark. Microsoft, there's been a shift where before OpenAI went into the enterprise world, there was a clear story for Microsoft. They invested in OpenAI, and Satya Nadella is basically like, OpenAI, you build the models, you take consumer, and we'll take enterprise. As soon as OpenAI said, actually, we'll do enterprise, a rift opened up. And investors started to say that story isn't as clean anymore. OpenAI could actually come in and disrupt Microsoft, the funder that enabled much of this to happen initially. And that's where Microsoft sits today. So it's a different story for both of those, but definitely not as clean as it was a year ago.
For either of them, you laid it out so extraordinarily well, to the point where even shareholders in these companies have lost or are losing their patience, like you with Meta. You've said as much on this program. So what does that mean into this tonight?
Well, I expect a very good quarter. The quarter really doesn't even matter, though, unfortunately. But 27% growth is going to be a decel from 33% last quarter. Because of a 6 percentage harder comp. It's not going to be about demand. The demand is definitely there. And by the way, you're going to see a 7% sequential increase in total revenue. We all know operating margins are going to get hit. They're going to be down 740 basis points. That's all known. I do think you're going to see monetization.
All right, we got about 4.5 minutes to go. 4.5 minutes to go.
Cloud business wasn't enough. And so that's the problem in my mind. But I just go back to Google and their quarter, and I feel very confident based on search and YouTube and what they put up for Meta's ad business. So I think the quarter's all right. So here are the numbers on CapEx: 125 to 135 this year. Whisper numbers as high as 2.7 million next year.
If Whisper comes true, are you screaming?
For sure. That's going to be up 40%. It's a huge. That will mean from 2006 to 2028, you're going to see something like $534 billion in CapEx growth without seeing really robust monetization. And so that's the thing. Interestingly, though, enough, Scott, 1.7% short interest on the position. That's the highest since November of 22. And then the other thing is the debt. Do they go to the debt markets for $60 billion? That's not going to go well.
Rising, CDS rising. That's an issue as well. AK, I wonder, what do you make of the fact that now people are becoming fixated on debt market and CDS?
I got about 3 minutes, 30 seconds to go.
Hyperscalers have gone through their free cash flow. We saw, of course, Google. Now they're going negative free cash flow. We might see the same with Microsoft, and Meta is predicted potentially to go negative free cash flow next year. So when you exhaust all the free cash flow that you had, which is your number one resource as a hyperscaler that's turning off lots of cash, and you go into debt, I think that is the appropriate time for people to start asking what's wrong.
Malcolm, how big of an issue is that for you as the Microsoft shareholder? There are suggestions. FactSet polled a bunch of analysts who say Microsoft's free cash flow could go negative in the fourth quarter for the first time in 25 years.
Yeah, I think that'll probably just be one more thing that pushes the shares down. Microsoft is in a really unfortunate position where I don't think that this quarter is the one where we start to hear a turnaround story. They're probably a quarter or two away from being able to tell a really compelling story around Copilot and how monetizing that is going to help justify all of the CapEx.
All right, S&P coming into the close.
The street's expectations at about 28%. Just looking at what happened to Alphabet last week when they put up really strong, really impressive growth numbers for Google Cloud, and the street didn't really care. The shares sold off anyway. I'm expecting, based on all of this, about 6% options action in either direction, that move is probably going to be down. I think they're going to get punished here because they're still not going to be able to tell us a compelling enough story about where growth is going to come from to offset all of that spending. So going free cash flow negative will be just one more knock against a story that's already got a ton of skeptics out there.
Do you feel like Microsoft has lost the plot a bit? It's almost as like AK was laying out here. You take yourself 2.5 years, 3 years ago, they were writing the screenplay for how this was all going to come out. And now through the move that OpenAI has made that Alex was alluding to, some are questioning whether in fact this story is going to be written in a different way than we thought.
Yeah, I think they lost it and they're starting to get it back. I think they had their come to Jesus moment with the idea that maybe having fractured Copilot aims isn't really going to get us there. Maybe not incorporating OpenAI the way that we should be isn't going to get us there. And I think they've already sort of taken their medicine in a sense, and we're now seeing them kind of work through innovating their way out of this problem. So the 20% slide in their shares year to date reflect that. I think we're probably going to see a little bit more of a slide after earnings, but I think this is probably the it's bad as it gets kind of scenario for Microsoft in comparison to a lot of the other hyperscalers that are kind of flying out.
Well, that is a suggestion that the downside risk is limited for both of these names because of the very stats that I read to you about stock performance. If Meta trades lower this evening, you a buyer?
Semis continue to fall off. All right, Netflix moving back up. Netflix. 5 seconds to go. Netflix. That's a wrap.
Thank you. Steph, thanks as always. It's going to go out pretty much on the lows of this session. Now it's going to close by more than 2% lower, more than 1,000 points.
All right, folks. Got earnings coming up. I'll stay on for a few minutes and see what Microsoft and Meta do. That's quite a pullback. Wow, it's a pretty big drop. If you're just joining us at the closing bell, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, July 29th. Fed keeping rates unchanged. The market's not responding well to the 30-year yield up over 5%. Meta dropping off. At the moment, Meta is down.
And of course, we're about to get some huge earnings reports. Our team is all over at Microsoft, Meta, Qualcomm, ARM.
All right, folks. I'll be in the trading room. Have a good evening. Take care. I'll see you tomorrow. Ciao. Just a reminder, I won't be here on Friday. I'll be here tomorrow, though. I'll see you tomorrow. Take care.